welcome back. This is Bitcoin Magazine Live. I think this is our 26th episode. We've had to start a few episodes here in the red with the Bitcoin price, which is, it may seem on the surface unfortunate, but we'll get into just why this is such a great opportunity. We are up from the 36, the 35K of earlier this week, so that's always nice. But we'll get into all that price. I want to give you the lineup for today. We've got Timothy Allen coming on. He's a photographer to talk with Q, fan favorite. We've got Meet the Plebs. Shawn Amick is here with Casey Carillo on deck. And after that, we've got a deep dive with CK, Dylan LeClair, Sam Rule, Q, myself. We're all going to talk about this bear market. There's a couple other items on the agenda. Q, I don't know, what else are we getting into on the deep dive today?
I know we're going to spend a lot of time on this FOMC meeting. Powell is going to come live on air in about an hour and a half to essentially tell everyone that what he said 3 months ago is now negated and that he's going to go ahead and ramp up interest rates. Expectations are this is going to happen and be done happening by this summer, which is a much faster pace than the 2-year wind down that he had assured investors. And this is no doubt, in my mind at least, a direct cause of what we've been seeing in the stock market and even the broader crypto markets and Bitcoin as well.
All right, so we're bearish but hawkish. But we're always bullish here about the Bitcoin. That's the bottom line. That's what we're here for.
Totally.
But no, go ahead.
No, we were just literally talking about this not even 30 seconds ago before we went on air about how what Bitcoin is down, I think at this moment in time from highs about 40% from January 1st, just down 25% from January 1st, but even down 45% from the all-time high it hit back in November. And yes, this stings. I literally bought at 69,000. I bought some then. I bought some at 40,000. I bought some at 50,000. I've been buying even in the 30s, and we keep buying, we keep accumulating, because when you zoom out, we're up and we will continue to go up. And as more countries continue to get involved, as more people get involved, the value in USD will increase, but eventually we will get to the point where we no longer measure Bitcoin's price in USD. And that will be a glorious day.
Absolutely. Q, remind me that you bought it at 69K. I have a question for you, but first I want to get into a couple PSAs as we start this show off. Guys, remember to download the Earn Carrot app. We're going to give away Bitcoin live on air, on screen, but also in the YouTube and Twitch chats. So if you're watching on Twitter, I believe we're live on Twitter right now as well, Facebook, LinkedIn, hop on over to the YouTube side of things, dig into the comments, and we drop codes there that you enter into the Earn Carrot app. Great way to get free sats, and we're doing it 4 or 5 times a week. At each show, we give away, I don't know, a couple, thousands of sats. So it's a great opportunity to stack if you don't want to buy. If you have absolutely, nothing, we're asking you for a bit of your time and attention in exchange for some Bitcoin. What could be better than that? So, what did you just send me, Q?
We will talk about that.
Oh yeah,
I had to ruin the chat, ruin the flow. It just had to be done.
I love Neil Jacobs. Shout out Neil Jacobs if you're
Tune
listening.
in, Neil.
We thought I don't know. We're basically in regards to the thumbnail with a bear. I don't know. We're trying to reel people in to talk Bitcoin with us. The price is 45% down from all-time highs, something like that, maybe more. If that's not a bear market, I don't know what is. What's the technical definition, Q? Give us a technical definition of a bear market.
I believe, if I'm remembering my math correctly, it's 20%. So yeah, 20 once an equity, we call it a bear market, but an individual equity, an individual asset can also just enter a bear market once it's declined 20%. And that
decline 20%, does it have to be an all-time high just from any price? I mean, it's relative, right? I would say on a long time scale, definitely not a bear market. On a shorter time scale, we've had a price decline. How are you arguing that with me?
So
not you, but just
I like to use a longer time frame to really measure that 20. I've heard people go as little as 6 weeks to as much as Like I like to look at what is it, 12 weeks, so 3 months. That seems to be a window, and it really is arbitrary at that point. Like the news is going to use whatever time period makes it sound more frantic for you. So I don't really like base myself on, oh, is MSNBC or it does
Yeah.
Fox Business say, oh, we're S&P's in a bear market. I don't really care about that. I care about
Yeah.
what are the industries I'm in. So like, for example, I love the semiconductor industry. Everyone in Bitcoin should love the semiconductor industry because as we continue to improve the ASIC capabilities, all of these semiconductor businesses are just going to continue to sell their products long before they're even hit the shelves. They will continue to boom up, but there have been ups and downs within the semiconductor industry, and you can find indexes that are focused on that. I like to focus in more on like sectors that I like to look at and see like how is that sector overall done, because like you could be convinced that Bitcoin and cryptocurrencies are going to go to the moon, and so therefore your portfolio is also going to reflect Bitcoin adjacent equities. But if the
I
basket of Bitcoin equities are going down, it doesn't matter if you have the best stock, best equity, everything is going to go down as a result.
it's I don't really see a problem with just calling it like it is. The price is lower than a lot of people had hoped for the majority of last year. Everyone was calling for six figures. I don't think there's anything wrong with, I'm not shorting Bitcoin by any means. I'm all in on Bitcoin. I think a bear market is just a great signal for people to just buy. Just call it like it is. Hey, the price might not, it might not hit a new all-time high. We don't ever know what it's going to do. So just, I don't know, I take no issue with using the term bear market to describe recent price action, retroactively, price action. I'm not making any predictions about the long-term effect. I mean, I would like to see six figures within the year. I don't know if that's going to happen. I'm going to stack like it is going to happen, though. I'll tell you that.
I mean, I personally think that the terms like bear and bull markets are a little antiquated, and like they are more so for like the Wall Street guys who needed to have some. Honestly, I don't even know the fucking history of it, and I'm just making it up at this point. But like it derives from Wall Street and it comes from that sort of space. I don't think it's worth our breath. However, it's also nomenclature and like very easily understood. So it's a much quicker way for people to be like, oh, rather than the stock's in a decline or Bitcoin is falling, is Bitcoin's in a bear market. Do we think that overall? No. Our time horizons that we always talk about are years, decades in advance. Nothing is in a bear or a bull market for decades. Nothing is in a bull market or a bear market for years on end. Like there is fluctuation.
Hey, Q, I gotta interrupt you now. You're getting roasted in the comments, man. We've got
Oh,
I am the Buddha. Have you seen the YouTube comments? We've got I am the Buddha. Start from the top. He says this channel needs to apologize to BitBoy and the entire community for airing that video. I am the Buddha. No, we're not apologizing. It was a great video. BitBoy had a great time. I had a great time. Svetsky had a great time. If you don't like the video, turn it off, man. we
what? I'm not a jackass for
I
buying
know.
Bitcoin at 69,000.
Yeah. I did want to ask you about that though. I'm not calling you out on that, but if you're a charts guy, listen, if you're a charts guy and you're using technical analysis to determine your buys and sells, why'd you buy the top, bro?
Okay, so there's actually a theory that I'll talk stocks about it because this is where the theory derives from. But when a stock hits a new all-time high, that's actually a great opportunity to buy the stock because there is no overhead resistance now. You may have psychological hurdles such as like a round number like hitting 100, hitting 1,000, 10, 50, wherever. Those may still exist. However, you no longer have this overhead pressure of fuck, I bought this stock 6 months ago. It's been down, but hey, it's climbing up. If it breaks even, I'm going to sell and just like get my money back. That is the mentality of so many people. So, unfortunately, when you're buying something coming back, that's why I talk about resistance levels. There's no such thing as a resistance level when you reach an all time high. So, this goes back to like I learned CAN SLIM trading from Bill O'Neill and Investors Business Daily. CAN SLIM is an acronym. The N stands for new, and it can be new products, it can be new ideas, new inventions, new leadership, and new highs. They jam a lot into one acronym, but the new highs is one of my favorite things to chase because you can, the theory goes like, you may think a cheap stock is cheap and discounted, but the truth is there's a reason it's cheap and discounted, and it'll probably keep going down. Versus like if a stock is hitting new all-time highs, it's probably people that are on Wall Street that are looking at the stock saying this still has room to go. People on Wall Street aren't trying to lose money. They are going to make money regardless. They just do. Unfortunately, they may not beat the S&P 500 as we saw last year with most hedge fund managers doing worse than the entire market, but their goal is to make money. And as a result, they're not doing something because they're like, oh, I think this will go up. It's like, no, we believe in this and we're going to push the price higher. We need someone to buy it at a higher level, but our expectation is that some buyer will come in and buy the stock at an even higher price.
I don't know if we've ever gotten into this, Q, about your particular strategy. I don't trade, but I'm always interested in what people are doing. I guess I do make one trade. I exit dollars, I buy Bitcoin. That's one trade I make consistently. That's my strategy. Very simple. I'm a simple guy, works for me. Other people have more other people have more complicated strategies. So I was wondering, do you short businesses and do you short Bitcoin? Now, careful, this might get you kicked off the whole show, but be honest.
I don't short anything.
Okay, awesome.
The reason why, and like kind of to what we were talking about with Greg Foss the other day, like there have been moments where I've bought different funds that are essentially reflective of the VIX, the volatility index. And so I'll keep like a small percentage of my portfolio in that. And as a result, like that's essentially dragging my portfolio down 5 or 10% of like my portfolio size. But then in moments like this, where the VIX went from under 20 to now it's over 50, that made up for my losses that I felt in equities that I've held. So no, I don't short anything, to be quite honest. My dad taught me this old lesson where if you buy a stock, your downside risk is already calculated in. Whatever the stock is worth, if you bought a stock at $100, your downside risk is $100. Your upside risk is infinite. You're never gonna get infinity, but like you have that upside benefit. The exact opposite is true when you short. You have the upside risk of only the 100 based on you bought the stock at 100. You think it's going to go lower. You can only net 100. But your downside risk, what you can lose, is infinite at that point. You could literally watch that stock go from 100 to 150 to 500, and you've now lost $400 on the ability to only make 100. That risk calculation to me, just it doesn't make sense. So I err on the side of I'd rather have it. I'm going to say this, but it's also not my strategy anymore. I'd rather have cash in instances where I think we're going into a bear market. However, over the last year and a half, I've been a big believer that like inflation is going to come and it's going to come bad. So I've been very hesitant to be too cash heavy. And it's paid off for me. I have my own strategy where I'll go fully invested for a majority of the year. And then when I'm like, oh, we're about to rip, or I think we're about to rip, then I start going on margin and I can double my wins. And then like sort of when the market is sideways or even going down, I'll temper my losses as a result.
All right. So what is your it looks like Tim Allen's here. Let's take a minute. We didn't even really finish up our intro. So let's take a minute and give away some Bitcoin as we go over this. We've got the Bitcoin 2022 conference coming in just 70 days, I think. So we've got a couple days left of a major discount on those conference tickets. You can get 21% off with the promo code YTMAG. That's a huge discount. If someone buys their conference tickets during this show, we'll make it rain Bitcoin in the chat. So that's promo code YTMAG for 21% off your Bitcoin 2022 conference tickets. Come see all the legends in Bitcoin, speak live, hang out with them. We're just going to be partying and just like celebrating freedom with, a bunch of other people who think alike and unalike are not like ourselves. It's going to be a great time. Q, I don't know if you have anything you want to add about the conference.
It's just so much fun. Like if you want to meet us, if you want to hang out with us, if you want to, what can I say without tripping the algorithm? If you want to burn grass with me, find me at the conference and we will light one up. It's just a great time. And like, especially if you are as much of a Bitcoin bull as all of us are, it's the place you want to be. It's the environment. You want to meet these people. We've watched businesses get started based on conversations had at the bar. Like, it's just all around amazing stuff. Plus, you're not going to want to miss like the insane announcements that are going to happen out of this. Some of the stuff that the breaking news that will come off of this conference, it will be one revolutionary.
Yeah, and so we have a short break, but we'll be back with Timothy Allen, not the actor, the photographer, right? We had to make that distinction. Not Tim Allen. This is Timothy Allen. We'll be back in just a minute to talk to him.
The Twitter account, but big fan of your photos and excited to just chat with you about what's going on, where you are in the world, and Bitcoin.
Sure, sure. Yeah, it's all good at the moment. Very Bitcoin at the moment, in fact.
You're in Mexico, right?
Yes, I am. Yeah,
Nice.
I've joined everyone else as close to one sort of Florida on one side and El Salvador on the other. It's kind of like it's a nice little halfway house.
Love that. Love that. I won't. I don't want to steal too much of this.
Yeah, yeah.
We'll just talk about this on air.
Mm.
Q, you are on air, man.
Okay. I was like, wait, I didn't get a countdown. What is up? We are back. We are live. I have yet again hijacked the show from Alex. Get out of here. Bye, Alex. And I'm joined by photographer, adventurer, and just all around humanitarian Timothy Allen. Thank you so much for joining me down in Mexico. How are you doing?
Very good, thanks. Thanks for having me. Yes, in Mexico. Lovely place.
Can you share, is it like Mexico City or are you closer to a beach?
We're very much closer to a beach. I'm kind of in the Yucatan Peninsula, in an let's call it an undisclosed location for the time being, but very close to the beach because I have my whole family with me. So
Lovely.
the nearer to the beach, the better. You learn that as a father after a few years.
You mean to tell me that they enjoy the warm weather and water to just sort of dip into?
Yes, I mean when you're trying to run a business and you're spending your whole life with your kids, you get very used to making sure there's something to distract them at all times. And in a place like this, that's either a beach or the pool, and we've got both here, so it's all good.
You always have to have a body of water to keep them entertained.
Correct.
So,
yeah, and me as well.
Tell me a little bit, like what prompted, if you don't mind sharing, like what spurred your wife and you to decide, like, let's go down to Mexico for a little bit? Was there desire just to get away? Was it getting a little too uncomfortable where things were?
It's a combination of a lot of those things. I've run a media company for like almost 20 years with my partner, and when COVID hit, our income went pretty much down to zero almost instantaneously because all my work's abroad. And when you're making films, especially in organizing expeditions like years in the future, it's not a very easy thing to bounce back from. So that was the kind of beginning of it all, I suppose, that we had to make a few really sort of serious life decisions. And then as you kind of progress along that route, after the first year wondering whether things are going to get back to normal, then they're not, et cetera, you start thinking about where you want to position yourselves. And we had a few things we could leverage in our favor to sort of support us in a completely new sort of way of life / business model. and what part of that is coming to Mexico and various other places in Central America and other places as well. And kind of living a completely new life. Fortunately for me, of course, out here, well, there's a lot of Bitcoiners out here as well, and we're very close to El Salvador and Florida, where a lot of that kind of stuff's going on. So it's a nice little place to position yourself, and surprisingly, a large number of people, like-minded people, have come to the same conclusion.
That's truly wonderful to hear. And again, just as a reminder for those who are watching, who aren't as familiar with Timothy Allen's work, you are an incredible photographer and filmmaker. I mean, you went on adventure after adventure and captured true beauty in places that not everyone goes and visits. During this time, sort of exploring Mexico and Central America, were there things that stood out to you as a surprise, or things that aligned with the expectations you may have had going in?
Well, we've only just got here, so I mean, I'm literally 10 days into Mexico. But first impressions are, well, I had, funnily enough, out of a lot of the, I mean, I've been to a lot of countries over the years, and I've never actually set foot in Mexico before. And we've kind of rocked into the most touristy section of it, I suppose. It's very, it's a little America here, depending on where you go. But we flew into Cancun, so everywhere around here is oft, it's becoming a bit of a holiday destination. Has been for a while for Americans. So that didn't really surprise me. I didn't really have a huge amount of expectations in coming here. In what it was going to be like, other than the fact I knew it was the Caribbean, so I assumed it would be hot and sunny, which it is. And so far, great people. Slightly more expensive than I imagined it would be, funnily enough. And I think that's the US influence that's done that.
I don't doubt that.
I mean, what's that?
I don't doubt that. All of those like vacation destinations and spring break spots for the college kids end up being, it's not priced as though Mexico is pricing it. It's priced as though American tourists come in and drive the prices up.
Well, what's been interesting for us is we came from Spain. We were in Spain 2 months before, living there, came to here, and it's on a sort of day-to-day basis. Where we are here is more expensive than Spain, I would say. And what surprises me is like not everyone is interacting with tourism in the way that, obviously, if you're a certain echelon of society, you can make relatively decent money. But if you're not, I'm quite surprised at how expensive things are in the shops. I've yet to find out how your average person here is affording it, but it's been really eye-opening, and we're looking forward to. I think we're going to be here for a good few months. They're very generous with the visa requirements here, and you get 6 months as an English person like myself. So that's plenty of time to have a really good route around. Plus, of course, it's very quick to nip over, do your pilgrimage to El Salvador, which we're going to do as well.
That would be lovely. I've only been hearing amazing things, and you'll have to clue us in and take as many pictures as you can of Bitcoin Beach as it's being built out. The Bitcoin community is definitely very excited to see what gets built out. We only hear great things coming out of those who are down there.
Yeah, and I've got a couple of friends here, Bitcoiner mates that I've known for a while, who have spent months down there already, and I think possibly, I'm not sure, I'll go and visit El Zonte, of course, you kind of have to, but I'm a little bit more interested in the broader story of what's going on, and from what I know of, I don't know, places like El Zonte, not that there are, but in non-Bitcoin places like El Zonte, they often sort of like exist in a bubble, and I want to really see the rest of the country, especially the part of the country where they're planning to build the Bitcoin city, because I could easily see myself positioning us there for a few months, just because I've been a journalist for many years. I wouldn't say I necessarily do it now, but I worked at a national newspaper for 8 years when I was younger. So I've got it in my blood. And whenever something's happening, it's really tempting to position yourself close to it and just be amongst it. And I know what it's like because I've lived in various countries around the world over the years. And it's always better to be there. And, given the choice, like, if as a Bitcoiner, I think the big mecca is Austin in Texas. But the more interesting play is to go to El Salvador and just position yourself there, because it's an experiment in the making. And if it works, as we all anticipate that it will, you can make a life for yourself amongst it. I mean, and things like that are really exciting for me, especially.
I want to go back a little bit just to have you share with us and our viewers, what was your orange pilling experience? Who was it that told you about Bitcoin? How was it received? Were you skeptical at first? Did you dive head first into the rabbit hole? Talk us through that a little bit.
I wasn't a skeptic in the slightest in the beginning. In fact, I didn't really. Looking back, I don't think I really knew what it was I was being talked to about, because I came from a very different world, the world of journalism and the media, and I had absolutely no interest in anything financial or, I mean, I was covering, let's say, the kind of stories I was covering had a libertarian edge to them. Let's say I've always been very freedom-minded, but I'd never even contemplated anything like money, Bitcoin, or anything. I met a guy on a plane flying out to the Middle East, and he was a what do you call it? He's a doctor of some kind. Anyway, it's one of those planes where you could sit at the bar and get pissed, And I remember him going on about it for hours, and he was really massively into Dash as well. I don't know whether is that even still going, and he was kind of like, telling me all this stuff, which when I look back now in hindsight was all a load of crap, really. But he was so enthusiastic, and I think it was true for a lot of us back then. The further back in history that you go with Bitcoin, the less everyone knew about it. It's quite astonishing now, how much everyone kind of instantaneously knows about, the network, the money side of it, the libertarian side of it. It all comes in a package now. And I think in the past, you kind of pieced this stuff together, and I didn't really understand any of the implications of it in the long term, of course. But this guy was so enthusiastic, and when I got back, I had a quick look, and it opened up. Like, what interested me instantaneously was, like I say, I've never had any interest at all in anything financial. I've always thought that world was boring, and it opened me up to the notion that economics and this aspect, is a very fascinating subject. It's the subject of people expressing value through whatever medium. And all of a sudden, slowly over the years, I realized it was like, because I've always been an avid people watcher. My whole life I've spent analyzing people, photographing them and filming them. And I'd overlooked the fact that the sort of the network of value between people is an amazingly interesting way of looking at the world. And then that led me on to what is money, of course, which is almost as big a rabbit hole as Bitcoin itself, if not is the same rabbit hole. I don't really know. But and then, and then I started acknowledging how important the decentralized aspects of it were, and because being a sort of freedom lover my whole life. So it was I had no skepticism in the beginning, because all I had to go on was this incredibly enthusiastic doctor on a plane who like most people now, never stop going on about it. I mean, God forbid anyone asks me about Bitcoin. I've got used to, over the years, really toning it back a bit and hardly saying anything, hopefully. But sometimes you just forget, and next thing you know, they're looking at you with this glazed expression, going, "What the hell is this guy talking about?" Time chains like, because the whole Bitcoin world has moved on a lot since then, and the kind of the philosophical aspects of it were rarely talked about back in the day, and the very macro implications of hard money and how deflationary money, these kind of things. And there's a lot of that about now, and I'm very glad that it's being spoken about, because it is highly interesting and has put a number of the pieces of the puzzle back together for me. There were various missing pieces, and because I for years I wasn't 100% sure why this thing was so important, especially because I've worked in I suppose what you call it's a bit like the environmental world for quite a while. I studied zoology at university. I worked in Southeast Asia, and then I moved into journalism, and I often, kind of covered the sort of environmental world. So I know it very well. And when it clicked, when the understanding of the sort of macro implications of, the hardest money in history clicked in a sense of my environmental life, it was an absolute moment, and it was one of the biggest pieces that was missing, because I know that world quite well, and I know the kind of people that populate it, and they're not very good at seeing through, say, the fact that Bitcoin uses a lot of energy. That they'll stop there quite simply and easily, and you really do have to push through that to understand where this thing is going if sort of widespread adoption occurs, and you need more than a conversation with a mate or with someone who works in the environmental world. You need to be orange pilling them consistently over a sort of 6-month period, because as everyone knows, it's all about the hours you put in. It's all about the proof of work. If you put in the hours to understand it, you get it, and everyone in this kind of anyone that's interested in Bitcoin, how much they know about it instantaneously, because it's you have to put in the hours to learn it. And if you've put in the hours, I don't yet know many people. In fact, I don't know anyone, but I'm sure there are people out there who don't come to the same conclusions. So yeah, it's a mind-blowing thing, and I'm very grateful that it's sort of in our lives.
I'm gonna need to pick your brain on tips of toning back my Bitcoin conversations with friends, because I've been labeled the Bitcoin guy. Anytime anything happens, what do you what? So, well, I'll be bugging you a little bit about that, but I do want to also touch on a little bit, given your experience in the environmental space and all of the FUD that just gets circulated about, oh, Bitcoin is bad because of this reason or that reason. Like, I'm on your side. I see the net positive. I mean, the drum I always pound on when it comes to like the energy usage of Bitcoin versus gold versus the US dollar, I always remind everyone, what backs the US dollar is our military. You really don't think our entire military complex doesn't actually use more energy than Bitcoin mining? Really? So I'd love to just sort of poke your brain on ways you see to bridge that gap between the environmentalists who maybe are stuck on the Bitcoin uses so much energy, and how do we show them the light?
I mean, the conclusion I've come to is I wouldn't necessarily debate it on their terms, which is the amount of energy it uses. I mean, it's obviously a nice analogy to tell someone, how much energy what we call tumble dryers, clothes dryers uses, and various other things about renewable energy and the amount of renewable energy that Bitcoin uses, et cetera, et cetera. But I don't think any of those are the correct way to aim at it, because the goalposts continue to change, and I guarantee you, the people that are screaming that it uses too much energy now will be satisfied with the renewable content for a matter of seconds before they start saying it's using too much renewable energy. And even if the whole thing was run on renewable energy, the argument would still be, well, shouldn't we be using that energy for something else? And the crux of it is, those people don't value Bitcoin. I mean, it's as simple as that. If you value Bitcoin, you don't care about any of that stuff. And even if you go into it, and the way to value Bitcoin is to understand it. And the way to value the energy use of Bitcoin is to understand proof of work. And it's not an easy task, you know. It's taken me a long time to really get to the sort of near to the center of proof of work, and I'm sure there's another 1,000 miles to go. But you know, I've spoken to a lot of people about this over the years that know a lot more about it than me, and they've really helped me to come to understand the importance of proof of work, especially, or even just the fact that, you know, if you want that, money has to have a costliness to it, you know, which well, like I say, proof of work and what is money and all these big questions have to be tackled in order for you to value Bitcoin. Because the moment you value Bitcoin, which we all do, and there's many things you can value about it. It's fuck you money, it's decentralized money, it's like, you know, it's all these different things, and everyone comes at it from a different angle. But the revolution and the kind of the invention or the discovery was proof of work, bridging the divide between the digital world and the physical world, and giving scarcity in the digital world is an invention. It's like, you know, it's hard for, I think you've got to grasp this, because otherwise you'll open your computer and you'll see 6,000 shitcoins and go, what the fuck is all this all about, you know? And without understanding that there was an invention before all this happened. There was an invention, and there hasn't been a new invention since. You know, the other the coin, your favorite coin other than Bitcoin, doesn't necessarily have this same groundbreaking discovery in the sort of the scarcity of the digital realm, you know. And so arguably, you know, there's no easy way to go about it to convince anyone about Bitcoin's value. But one thing I have noticed is, slowly but surely, everyone has a touch point with Bitcoin, and eventually, if the world carries on going in the direction it's going, I'd argue that a lot of people are going to have a touch point with it, because it represents freedom in so many ways, and it's hard to not notice this kind of this movement towards authoritarian that we're seeing in various places around the world, some more than others. But when those kind of things start happening to you, then things like Bitcoin become super important, and they become part of the solution to the problem that you start seeing around you. And I think, for me, like I said, the state of the world now is something we've been talking about. I remember talking about, you know, in the 1980s, people were talking about getting microchips in your hand and being tracked everywhere you went. And I remember thinking, yeah, that'll almost certainly be a problem in the future, but who cares? You know, that's actually now a problem for us right now. It's actually it really is happening. It's like it's being made, it's being talked about, and suddenly now you can see how it's going to be implemented, and you can see how everyone's going to sort of like, well, not everyone, but a large number of people are actually going to invite it into their lives, just like we've invited phones into our lives. And that is now suddenly getting scary, because we didn't, in the 80s when we spoke about it, we didn't have the technology we have now, and it was very difficult to comprehend how it might be such a dystopian, you know, digital world. Because everything back then is like, digital is great, it's amazing, it's phenomenal, which it is. I mean, it's neutral. It's just that if you think, you know, that if you live in a country that's pretty authoritarian and you think that's bad, you wait till you get into the authoritarian digital world. Which is kind of like where we're being coaxed into, quite successfully as well. I mean, you know, even if you know all this stuff, it's very difficult to sidestep it. But thank God the technology of Bitcoin, you know, arose at this particular point and was discovered, because it really is, in my estimation anyway, it's an all or nothing scenario. I really do think, you sooner or later you will have a choice. There only appears to be two paths from here, and one is it's centralization versus decentralization, and it's the big battle that's the collectivists versus the individuals. It's the big battle that's happening at the moment. The pendulum has swung somewhat in the favor of the centralists. And let's hope we sort of like ride a nice wave back to the middle with the decentralists.
Absolutely. I mean, there are a few things I want to unpack. I think firstly, you brought up sort of the energy cost that goes into money, if you will. I'm going to try to paraphrase Jeff Booth, who I think put it excellently, where he kind of talks about what we don't see when we look at the price of gold is there is still an inherent cost to mine the gold, and that is baked into the price. There is an inherent cost to maintaining the US dollar, and that is baked into its value. And there is an inherent cost in mining Bitcoin that also is baked into its value. And as a result, because of this mining process, if you will, there will be a base level of value based on how much energy and the energy cost it takes to create or mine or transact said Bitcoin. So as long as that is happening, there is, in theory, going to be value in this asset. The other point, and for those who didn't see when Timothy was sort of talking about the decentralization nature, that stemmed from like the idea that we're going to have microchips in our bodies to we have a microchip in our pockets. I was holding up my phone, and there's an excellent Netflix documentary called The Social Dilemma, where they kind of talk about like the creation of these different social media platforms and what it is entailed and caused and created. And one of the hearings where a former employee of Facebook who was urging political leaders to essentially like create restrictions on the reach of social media and social networks equated what we're witnessing now to what was being done and what was being said about TV when it was first introduced in the 50s. And all of a sudden, the access to TV for every single household had a TV, and every single kid was now being raised by a TV instead of their nanny. And what effect is that going to have on the future of that generation being raised at that time? Well, here we are, fast forward now 60, 70 years, and we have a different form of technology in social media and just our phones and the addictive nature that these apps and this technology has created in our human body and psychology. And to your point, every single company is centralized. I mean, that's just the nature of business. Is you have a group of leaders, whether it be one person, a board, or an entire company that gets to voice their opinions, but you have this centralized entity that controls and dictates what can or can't be done. I am curious though, because I know that you say it's sort of one either or. We're either going to be decentralized or centralized. I frankly actually think the third option is where I sort of align, which is there's going to be, you have to live in harmony of the two. And there will be certain things that are decentralized, ideally like our financial system and money. And there will be certain things that are centralized, like protections and local governments. But I'm curious.
Sorry, I was talking about the money. Yeah,
Okay.
I was paraphrasing, but yeah, no, I agree 100%. I mean, like I say, centralization and decentralization is a metronome, and ideally you find a balance with everything. And I'm almost certain that balance would involve decentralized money, because money is the base layer of almost like the human experience. And by that I mean, the value decisions that we make are expressed through money, and and our values are one of the networks that hold us all together. So it's very important that the base layer of existence doesn't have someone in charge of it, who can manipulate it, which is the system we exactly have now. And you were talking about costliness of money, and I mean, if anyone's listening to this who's never asked themselves the question, what is money? It's a super important thing to dive into, because, and it's good to start with the history of money, because historically, money had, good money had certain properties, and costliness was one of them. And it's a fascinating look into the past even when you go back to like cowrie shells or something. The proof of work in cowrie shells was 3 days walking to to the beach from the middle of the of an island, collecting the shells, the knowledge of knowing where they are, bringing them back. And there's the cost of, there's the proof of work right there. The fact the shell is in your hand is the proof that it has value, because the only way to get one of those shells is through value. So that value can then be transferred. So it's an expression of what you value, you imbue with that into that shell, and you pass it on to someone else. And there's been various incarnations of shells and cowrie shells, and every time, I mean, it's like, I've traveled for years, and beads is something I've been interested in for many, many years. And bead history is almost like the history of civilization. When you see, like the Venetians, when they realized that they could create glass beads very easily, which had super value in other parts of the world, certainly in Africa and the African continent. They're printing money, basically, and they can steam into Africa and do whatever they want, just printing off these, creating these small glass beads that are 10 a penny back home. And all of these things are the corruption of value. And if the value's when the value's corrupted, everything gets corrupted, because all our judgments about how we interact and what we value and how we store our sort of work becomes corrupted. And the temptation to corrupt a centralized money supply has always happened historically. And you could argue it's never not going to happen. It's a totally natural thing to do. You try, if you had access to the money printer, what are you going to do? Even if you're the most saintly guy on the planet, are you going to print a bit off when you need it? And you might not do it when things are good, but when the shit's the fan, and you know that money printer's there, you're going to go for it. And you're devaluing the value. You're literally devaluing in that motion. Plus, of course, it's just unfair. And I think I like the scales of justice to be good, to be in line with each other. Because, but yeah, and and I'm talking about social media as well. I've got 3 children, and we've kept them away from all social media, but also a lot of other things. And the older they get, the happier I am that we've done that since the beginning. Certainly because at the moment they don't know what they're missing, and they don't care anyway. But I'm progressively reading more and more about the sort of macro implications of social media in youngsters. And it's very subtle, but I was reading a fascinating article the other day about, it was by someone who works with children, and especially sort of children with sort of like, who weren't doing too well. And he said the way that children interact, or teenagers interact in many of the situations he's in, is really strange and unsettling. And a lot of it occurs through technology. And the face-to-face interactions are different than what he remembers when he was young. And we all know that to a larger or smaller degree. But what we don't know is actually what the longer-term implications are going to be. And I don't. All I know is that there seem to be, in my interpretation of it, the benefits do not outweigh the costs at the moment. But as we were saying earlier, when everyone's on social media, it's very difficult to buck the trend and not be on it, because you feel like you're missing out. But then, if you're a Bitcoiner, you already know that feeling.
Ignorance is bliss. Ignorance is. I commend you and your partner for being able to, keep your kids, I wouldn't say naive, but like show them what the world is like, because social media is not the world, and unfortunately, too many kids are growing up with this idea that this is real life. Although I think a lot
of parents these days forget, I think, that they know a lot more about life than their kids. And one of our jobs is basically, in the beginning, is literally to tell them what to do. A lot of people don't. Before I had kids, I didn't tell anyone what to do. I was very libertarian. And then as soon as I got kids, you have to adopt that side of yourself. You have to sort of nurture it, and it's important to say, look, no, you're not doing that. You're absolutely not doing that. And when you get to a certain age, and you're free from us, you can do whatever you want. But in the meantime, we've got a plan for you, and it's based upon what we think we know and what I know, and then what I know from social media as well, because I use social media. And sometimes without realizing it, I'll realize I've just been sat watching bullshit on TikTok for an hour. And I'm like, holy, and you have to slap yourself around the face and go, yeah, and I'm a 50-year-old guy that loves the real world. And what am I doing? What am I watching it? Now, you imagine kids, and they are super susceptible to staring at things, like moving things. I mean, because we don't allow ours to use screens except on certain times, like they're allowed to play on an iPad for. This is going to sound so like I'm the worst authoritarian ever, but they're only allowed to play on an iPad for 1 hour on a Saturday morning, each of them. And they get a watch, and they press the thing, and they get an hour, and they all play a version of Minecraft. It's not Minecraft game like Minecraft, and they think about it all week. It's bizarre, they're literally talking about what they're going to do on that hour, like days in advance, and they get up at 6 o'clock in the morning on a Saturday to go and do it. And that's not good, because what they're producing in Minecraft is nothing. Obviously, if they were building an actual house, or they were digging an actual hole, then I would have a lot more trust in what they were doing. But Minecraft is something that, if it gets hold of you as a child, because I do know some friends whose children just play it all the time, and that is the metaverse right there. And
Absolutely.
and if you because I absolutely don't think it's good for kids, and when someone else, like I say, and all this talk of the metaverse and etc. of late, that's your best example of what it's like. And I don't trust the metaverse at all, and I'm probably going to reside in history as being an old fart that didn't understand it. But currently, what I do know about the real world and real interactions, and I really do, I do prefer that side. And so like you said, I'm going to ground my kids in that reality before they kind of get lost in the metaverse. Obviously, if we're in a simulation, then what I just said is a load of bullshit.
Honestly, I need to just have aluminum foil right here, because I could talk to you days on end about why I think we are in a simulation right now. But I do want to share, as a kid, a former kid who grew up, whose parents had an even stricter rule than the 1 hour on the iPad, which was, I was not given my gaming system. I was a PlayStation guy. Shout out all my PlayStation stands. But I was only allowed to play my PlayStation on summer, winter, and spring break. During the school year, absolutely not. And to your point about what your kids spend all week, I would literally sit there, like, for my birthday, which was after spring break. But so I'm literally sitting in my birthday for like 2 months, but I'm asking for all of these video games. And I'm literally staring at video game boxes that I cannot open, reading the manual front to back so I can like know how to play it from day one. It was so bad looking back. There were days where I was playing video games for 72 hours straight, just
So
nonstop.
what's your interpretation then, as someone, because I've dipped my toes in video games, but really I just didn't care, but I mean, do you worry about that? And do you think it's, what do you think of the metaverse?
So, well, I'm torn, because the metaverse itself, to your point, it already exists. Like you have Minecraft, you have Roblox, you have these interactive games that have already allowed people to create characters, create pseudonyms, and essentially like live in this fantasy reality, whether they're super immersed or it's literally as simple as playing with your keyboard or a controller. But in degrees and variations, it exists. I am a very big person on like church and state, work and life. I do my best to separate the two if and when I can. Sometimes those lines get blurred, but I think introducing work into an almost video game environment is a very, it's a slippery slope. I have my own reservations, and I'm uncomfortable. Like, I don't own an Oculus. I will gladly be the last person who does. I did, however, have the opportunity to like try one out, and like during whatever at Best Buy when I was there, it took me to Machu Picchu, and I'm afraid of heights. I am deathly afraid of heights. I know, my brain knows I am at sea level in Best Buy, but the way the program was, I was 500 feet above Machu Picchu. And there's a video that my roommate has of me where I'm like reaching around trying to find something to hold on to like stabilize in my mind that I'm actually there. That component of it, so scary, because I know in my head I am not there. I know in my head my feet are on the ground. And yet, because of the way my brain processed what I am seeing, the fear of I am so high up, my feet are on nothing. I, in theory, should just be falling based on logic and reasoning. I am just in the middle of the sky. I'm falling to the ground.
I'm sorry to butt in, but
No.
I have got an Oculus, and I bought it during lockdown to go to those Bitcoin meetups. Who is it who was organising them? Oh Jesus! Whatever. There were these weekly VR meetups where different speakers would come on, and it was great. But I had social anxiety at them. It was ironic, you know, because the environment that they happened in was like an auditorium. So you'd walk in, sit down, and listen to some people on stage do a talk, and then afterwards they'd say, right, you know, everyone just get up and have a bit of a mixer. And I couldn't approach anyone, just like I can't. but the truth is, like, whilst I remember at the time thinking that was quite radical what was going on, because I really appreciated sitting in that room full of Bitcoiners, because I didn't, for years I didn't know any Bitcoiners, you know, like a lot of guys. And certainly during lockdown, I didn't see any Bitcoiners. Everyone I was sort of interacting with was online. So being in a room and feeling like you were part of something was really good. But then again, and I have never been to the Bitcoin conference, but everyone that you speak to who went said the energy is unbelievable, you know, blah, blah. And obviously it doesn't compare to, you know, 20,000 NIMs on Oculuses standing in a room, you know. So I would still say that shows you, you know, I mean, obviously though, the metaverse in the end will be indistinguishable from this, I would imagine. Now, that makes total sense technologically, which is, you know, so who knows, man? I think it's gonna, whatever it is, it's gonna really fuck with people's brains when you know, and it may even open up our brains to the understanding of what reality is, because when you cannot distinguish between, you know, you being in, you know, there and here, then you have to question reality, don't you? And who knows where that leads.
Again, Tim, I need to get my tinfoil hat. You and me will just sit there for hours on end just discussing this, because we are in a simulation. We are.
Right, yeah. I saw a stat the other day that someone said it's 50-50. They reckon it's 50-50 that we're in a simulation, which makes total sense to me, because I would say the same thing. I could argue both ways, 50%, you know.
I do want to just very quickly take this opportunity. You brought up the conference, and yes, I am going to plug it. I am going to bring it up. Will you be coming down to the conference or coming up to the conference this year?
I really hope so. There are a couple of things that I need to sort out in order to go, but I'm very close. I'm literally a short flight away. Yeah, that's a discussion for off screen.
I will say this as someone who attended the conference, not as a member of the Bitcoin community, but purely as just like a speculative investor, if you will. I had an absolute ball just being around all of those people who all are aligned with the end goal of hyper Bitcoinization and Bitcoin changing the world for the better. Whatever avenue you want to see Bitcoin do that through, whether it's through the financial markets, whether it's through strictly just what's it called? Like philosophy, politics, whatever aspect of Bitcoin that resonates the most with you, there are groups at this conference that are going to talk to you about what they're working on, get you excited. And who knows, if you're not working in this industry, you could be exactly like me and find yourself working at one of these Bitcoin companies just a few short months after that. So highly recommend. I know there is a code down there for all you viewers. This code is only going to last for like 2 more days. So be sure to use it, YT Mag. I hope I don't get in trouble for reminding people that it's only 2 more days for that code, but go buy the tickets. Back
I
to
got a,
our actual conversation here, though.
well, I've got a question for you about that because I did a podcast a few years ago. I forget whose it was, a Bitcoin podcast, and I mentioned on it that even though I've been in the same industry for 25 years, and it's the kind of job that everyone goes, oh, I'd love to do that. In the last few years, it's sort of like it became something that I wasn't really that interested in when I compared it to the Bitcoin movement, and I said on that podcast, like if someone offered me a job in a Bitcoin company, I'd take it right now. I'd move my family to the other side of the world, and I actually really did mean it. And after the podcast, I got loads of messages from people, not offering me a job, which would have been nice, but from people in the same situation as me. So my question to you is, what do you say to people who absolutely want to work in a Bitcoin company, but who don't have any of the skills that when you look on a Bitcoin job board, it's mainly developers or people that have worked in businesses before? Because I think most people like myself, who, especially people who've run their own business for years, we could put our hand to it, we'd be pretty good. And judging by, like I say, the number of people that have contacted me since saying, oh, I'm in exactly the same position. I've done very well in my current job, but I've realized that actually the job to be in is pushing forward hyper Bitcoinization, because it's the thing you get up at 5 o'clock every morning to do. So what's your advice then to people like myself and those people?
I mean, I think I'm the perfect case study of someone with, like, candidly, I was actually trying to get a technical job. I wanted to be a data analyst, and like I spent some time learning how to code, and yet here I am using no technical capabilities whatsoever. It's really like, yes, you're absolutely right. A majority of the jobs are technical heavy developer type jobs, but at the same time, I would say like Alex actually has a great story about this. Like, if he wants to hop on and share it, otherwise I'm just going to steal his story, but like he cold emailed Safety just offering like to work for him for free. And I think that's a really interesting avenue to pursue, where like there are definitely people that are watching who resonate with certain podcasts or certain speakers, certain like thought leaders in this space, and reach out to them, their businesses. I mean, to your point, every business has a marketing team, every business has a sales team. I mean, if you want to actually look at the age of the people who work at Bitcoin Magazine, like I am like one of the elder statesmen, and I'm not even on the other side of 30 yet. So it's very much like a young burgeoning industry. It's one of the reasons I love it. I had a friend of mine one time who years ago, he was in the Bitcoin industry, and he was explaining to me, he was working down in Brazil. And what he was explaining to me, because I was working in Hollywood at the time, and his whole thing was like, the difference between your industry and mine is your industry is long established. If every industry is like wet clay, an industry that's long established like Hollywood, that clay is hardened. They have set their ways of the processes and what they want to do and how they want to do things. You can't really like imprint or change or shape things without just breaking it down. Whereas with the Bitcoin industry in particular, like it's 13 years old. The industry itself is even like not even that old. You turn around and you get to sort of see like this wet clay blob that is being formed and formulated and built, and you get to like really shape it. I think that's one of the most exciting things is, if you have an idea, if you have a thought about Bitcoin, run with it. if you ever want to tell the story about Bitcoin, come to Bitcoin Magazine. We will happily publish any thought, any idea, regardless of stance or belief or position. I mean, look at Svetsky's article yesterday where he just point blank was shitting on Bitcoiners and telling people to sell. Meanwhile, he is the hardcore Bitcoin maximalist at the same time. That's one of the things I love about Bitcoin Magazine is we're never going to hold you back from saying or doing whatever you want. I definitely think that there's always a way to do it. Christian Carolla, CK Snark, who heads up Bitcoin Magazine, his story is incredible where once he learned about Bitcoin, he quit his job on the spot, asked his parents for Christmas that year for a conference ticket to, it wasn't even the Bitcoin conference, just like a larger cryptocurrency conference, but Bitcoin and BTC Inc. were there. And he started off just working in sales for the Bitcoin conference, selling advertisers to come to the conference. Now he heads up and runs Bitcoin Magazine, but it goes to show you like, you just got to get your foot in the door, regardless of what your experience is. And then from that, it can transition into what you aspire to do in this industry.
It's good advice. The only problem for someone like myself is I'm 50.
Well, to be honest,
I got my first job literally exactly that way. I walked into a newspaper in London and got a job, and I had dreadlocks at the time, and they were right down to the back of my arse. Like I had a very long dreadlocky hair, but I had absolute enthusiasm. And I still, I haven't seen him for a while, but I still know the guy that gave me my first job in the media. And he was right. And I'm the same here. It's like my enthusiasm was much more important than my ability at that particular time, because I learned it. And especially in an industry like Bitcoin, I suppose there's, there are no experts there are no 25-year experts in Bitcoin, so your enthusiasm and understanding for it are super important. But yeah, someone needs to make a job board for the oldies like myself, and like I say, all the guys that I know who, because in a way, like, and we try this, but we're expected to just start companies in Bitcoin. And me personally, I've run my own company for so long. I just want to work for someone. I want someone else to tell me what to do, so I can just like focus on something. Because it's very difficult to switch from. I mean, like in my case, the way to work within Bitcoin is to make Bitcoin films or to. But sometimes we just want to. People, I know a lot of guys who are just absolutely ripe for something completely different, and like in my particular case, I love the mining world. I think it's absolutely phenomenal. I think good job working physically with your hands, working on mines, helping build things, these kind of things are jobs that a lot of guys I know would love, but they don't know anyone that works in the oil and gas industry. They've never met a single person in the mining industry at all, and it's just, it's something that the person that, I mean, obviously as the whole space grows, I suppose there's more work in that sense, but certainly whoever's listening, if you've got an idea, I know a load of people who aren't 18 to 25 or 18 to 30 who are desperate to sort of apply their skills to that world, and they all come from very different worlds. I know doctors, surgeons, media people, everyone, and other than us all grouping together and creating our own thing, which is fine, but sometimes that there's a time and a place for those kind of things, and but whoever can sort of start putting those people together, you've got that would be a great service, I think.
I want to continue this conversation definitely with you. It will probably have to happen offline, but there's also just another project that I am baking up here at Bitcoin Magazine that I think after this entire conversation that you and I have had, literally my mind is racing to be like, I want to go offline and talk to you about something. But absolutely, I could definitely see, I know Pomp has his job list, but it is very much oriented for developer types, like young, ambitious, hungry people.
It's also that the non-tech jobs are are kind of like business jobs, let's say. And when you look at the requirements, it says 5 years in business development. You know, like I don't even know what business development is, but I've run a successful business for 25 years. You know, so I'm probably good at business development. I don't know. I don't really know what any of those things are, because I work in a world where everyone just does their thing, you know, and we create what we create, and we put together, like, everything I've ever done is, apart from when I worked, you know, as a journalist, has been self-created. You know, like we run a company where we take people on remote expeditions and stuff, and it was all built from nothing, literally from the ground up. You know, you just go to a place, you find a team, you create an itinerary, you try it out, and then people come with you in a year's time. You know, and but it becomes tiring after a while. And also, I don't know about you, but I find, like, I was talking to a friend on Zoom yesterday about this exact thing. It's like, I don't have any ideas. Like, I can't think how to impact the Bitcoin world. Like, you know, like I'm normally a pretty good ideas person, you know, but it's almost like I know what I want in the Bitcoin world, and I've got it, you know, like something like a way to DCA, you know, like hardware wallets, like, you know, like I look at it all and I think, yeah, pretty good. Like, you know, I'm not even, you know, and I suppose that's because I lack the technical understanding of where this is all going. Because for sure, there's all kinds of, you know, and then I suppose I end up reverting back to what I know. And it doesn't fit greatly with the Bitcoin world, but other than say making films or whatever, you know.
I can see why it can be, I think, difficult at times to just like continue that chug. I was actually on the other end of the spectrum where I was working fully for myself, and I was not willing to give that up. So that was part of, I was on the other end where I finally realized, oh, it is great to not be told what to do. It's great to, today I just don't want to work. I'll add a day of my work on my work plate this weekend, but I'm just not going to work today because I don't want to. I loved that aspect of working for myself. But also to your point, like, we go through this issue, especially on the live show, and just with all of our content, where all of us are Bitcoiners. All of us believe in Bitcoin, and all of us want to convince other people to believe in Bitcoin. However, we sometimes have this, we lack the ability, and I think it's a little bit of empathy, to understand what non-Bitcoiners see and cater our storytelling to them. Because I am worried, and I brought this up on the show multiple times, about we are getting to a point, I think, where we have almost hit everyone who's going to be a maximalist. Every hardcore Bitcoiner knows about Bitcoin at this point. There may be a few others that trickle in over the coming decade and years. However, that like core base is established, but that next layer of Bitcoin fans, if you will, are not going to be the diehards, but they're going to be people who are invested, who believe in it, but they're going to believe in it in one aspect of it, whether it's the financial aspect, whether it's the political aspects, philosophical, etc. So I do think, to your point, it is on us in the industry to tell the stories that convince and help people who are not involved in the industry to better understand this and get them involved in this space.
I'm not sure I agree with you that there aren't many more maximalists to come in. I mean, just looking at my own experience of Bitcoin, I literally had mental blocks to being exposed to it. You know, like, it wasn't that I hadn't heard of it. I hadn't heard about it. Like, you would be amazed, like, working in the media, like, well, the media I worked in, is an incredibly insulating bubble. I mean, it really was, because I wish I would have heard about Bitcoin much earlier than I actually did. But I, and I still know a lot of people that will hear about it, and then they'll hear one bit of news about it. Like the most obvious one is that whenever Bitcoin crashes in price, everyone hears about it, and then they just live off that for years. Sometimes you'll see the same person a few years later, and they still think Bitcoin crashed because that's all they heard, you know. And But I think the inevitable, there's an inevitability, at least to a certain degree, of Bitcoin maximalism. The question is, are you prepared to find out? Like, maybe you're right. Maybe a lot of people don't really need to know. Like, I don't need to know how the legacy financial system really works, but I have actually found it out. But because I was interested, and I've always suspected that it was a very unfair scam, and it turns out that it was, like, really unfair.
Casino based out of Wall Street isn't legit.
Yeah.
I don't mean to cut you off. I always go back to the fact that you can buy a single stock. You can buy a double leveraged version of the stock. You can buy a triple leveraged version of the stock. You can buy options on it. You can short it. There are infinite ways to make money on a single equity. That blows my mind as to why we don't ring the bell of like, this is literally fraudulent, fake, and yet somehow we like derive global dominance based on the fact that everyone wants to put their businesses through this funnel that is the legal casino of Wall Street.
Well, I agree. And I think a lot of it comes down to the fact that no one ever teaches you about this. No one ever speaks to you about it, like at school. It's never touched upon. Like I did, I mean, in the UK, we have, before you're 18, you do a set of exams, and the highest exams you get to do are called A-levels, or were called A-levels. And I did A-level economics. Like, I did it. And I remember when we did credit creation, I wrote credit creation is something along the lines of it's a way to make money out of thin air. And, I had an essay come back with a big red line going through it saying, no, it's not, and I kind of went, okay. But the point was, we never spoke, like, with all this teaching of economics and the like, it stops at a point. It never goes to the macro of what the hell the whole thing is that's going on. And because if you started there, if you started at the like the fact that the fiat money currently is not backed by gold, for example, and then you trace, well, why was it at one point? Yes, it was partially, then fully, then there's a great, and you can really understand why people would do that, because I don't blame people for going down the fiat money route, because it makes total sense. If you're one of the winners, you win really big, and I think it's very natural for a human to want to do that. But we were never taught the concept of hard money, the concept of even the history of money, which, like I say, is amazingly interesting. It's not like it's boring and you're just going to sit there and go, oh my God. The history of money and why we use what we've used as money is an absolutely fantastic, an interesting subject for kids too. It's just that no one talks about it. And the conspiracy theorist in me says it's because they don't want you to know about it. But it is also just because it's the way it is, It's been like that for a long time.
I think you're absolutely, they don't want us to understand money markets, because it is, when you start to really dissect what happens as far as like, what is money creation? How did we end up in this, like, removing ourselves from the gold standard? I had the opportunity to read a book that last week we talked with the author, and he really broke down like the history of banking and how historically we have done this. We have gone on a gold standard and then gone off of a gold standard and then seen rapid inflation and then had to correct and go back to some sort of gold standard. That is cyclical, going as far back as the 1400s. Like, this is not something new. We unfortunately didn't reinvent the wheel when it came to like going off the gold standard or putting the entire global market on the US dollar-backed system, which was then backed by the gold standard after Bretton Woods. Like, none of this was original. We just continue to recycle, but because we don't teach it, because we don't take the time to like dissect why or what we're doing and what the outcomes are, we're doomed to just continuously repeat the same mistakes.
Well, or not even, we're not the one, in a way, we're not making mistakes. Someone is making a lot of money. Like, someone is granting themselves the ability to create money, which is the complete antithesis of Bitcoin. You have to work for your money. You literally have to do work. Either way, on a Bitcoin standard, work has to happen. You have to add value in order to possess the Bitcoin. And it's a really interesting, concept, because it's a bit like, you know, recently there's been a bit of a resurgence of the idea of personal responsibility, you know, which sounds like a really old-fashioned kind of idea, but all of a sudden there's a lot of youngsters out there going, wow, personal responsibility is quite cool. Actually, it's not sort of some old fuddy-duddy thing. And the same goes for proof of work, I think, is there is a very, when you kind of go into the concept of proof of work, you just start seeing it everywhere. And you start seeing everything as a proof of work. And then you start noticing where it is that people decide to not work, you know, and that's sort of like in rent-seeking situations and in other places. And it really starts to get your goat up. It starts to annoy you a bit, because it's like, yeah, you know, like it seems very fair and honest that you need to work for your, you know, for your value. And it's kind of like something that plebs do naturally, I think. It's just inbred, it's inbuilt within us. But yeah, it's like I say, once you start thinking about the concept of proof of work, you can see it everywhere. And there seems to be like two ways to do it. One is to seek the work, and the other one is to seek the rent. And one of them just feels much better. Just feels more honest, more like more real, more, there's more camaraderie amongst the workers than there are amongst the rent seekers, if you know what I mean. You know, like and that's kind of like what a pleb is, as far as I can tell. And in going back to what we were talking about, working and people wanting to work in the Bitcoin world, for me, a large part of that was, I just want to work with Bitcoiners. I want to be, even if I go to some shitty office job, I don't care. I want to work with Bitcoiners, because there's this certain understanding about what it means to sort of like, you know, to live and the way you live. And I think there's a lot of isolated Bitcoiners out there because of the nature of the decentralized world of Bitcoin, but also just because they just don't know any Bitcoiners around there, and they're reaching out online and finding their community, but not meeting in real life that much. And that's my segue back into you talking about the Bitcoin conference. There you go.
I appreciate that. We do have a few minutes before Jerome Powell just sends the markets into complete and total frenzy and chaos.
Yeah. Shit,
so we will be, I know a lot of you in the comments are asking, that has not started yet, but when it does, we will be streaming that, and you will hear my scratchy, raspy voice like just get so angry at the stupid things Powell will say. But yes, please, if you have not yet bought your tickets, please make sure you make your way to Miami. It is going to just be, it's going to be the Bitcoin event of the year. Last year's was, and it was truly life-changing for me to attend. It was just a great time. I will say, like, at one point the lines for food were kind of chaotic, and I promise they won't be this time, but like we had fun with it. I think at one point I convinced the guy behind me, hey, if I go to the bar and grab a drink, can you just save my spot and I'll grab you a drink? And we just kept going back and forth like that until like our section of the line was just having its own like mixer and party. And it was great. Like, you never know. And to your point too, like this was a gentleman who was like north of 50. And so like it's people of all ages, people of all exposure to Bitcoin are going to be there. And it's an excellent opportunity to, like, you're going to meet people that you follow on Twitter. You're going to meet thought leaders and hear them speak. President Bukele last year announced El Salvador was going to go on legal tender at the conference, and he will actually be making an appearance at the conference with another special announcement. We continue to take bets internally of what will this announcement be. My pick is he's going to announce on behalf of another country. I know Kaiser kind of alluded to that as well in an interview the other day. I don't know if you got a chance to see that, but
I did. I think was it Argentina or was it
he said Guatemala, and then someone on the screen was like, "Stop talking! You can't say this stuff."
Oh, really? Okay.
Yeah.
No, I think I heard the last couple of weeks as well murmurings of Mexico as well.
I've heard Mexico, Panama. Kaiser is the first I've heard of Guatemala, and I think he literally said that to put us off the trail. But I think it's going to come from Central America. I would love to see Argentina. I would love to spend some time down in Argentina. So I am very down with a Bitcoin standard down there.
It's really, it really, I haven't, over the years, I haven't given Central America the respect I think that it's been due. I've traveled a lot in Asia and, you know, over that side of the world. But really, it's a sensational place, and it's super vibrant. It feels super vibrant at the moment, and I can't wait to get to El Salvador. I really can't. I have no expectations at all. In fact, I have I have very low expectations, because I know a lot of people that have spent quite a bit of time there, and you know, everyone says, look, don't get your hopes up. It's not like you're going to be walking around spending, you know, Bitcoin everywhere. But I don't care. I just think that what's going on there is impressive and exciting. And like I say, yesterday I was chatting with a few of my Bitcoiner friends about a project we were thinking of doing, and the conversation came out about regulation, or you can't do this because of that, and blah, blah, blah. And it just occurred to me, imagine if your own government was a Bitcoin government, and anything you could dream up would sort of by default have the backing of the kind of people that run the country. What a phenomenal experience that would be, to not be thinking about what you can't do, and instead thinking about what you can do. So that's what I find most exciting about El Salvador.
I think that's a great place for us to wrap things up. From your lips to God's ears, Timothy, that countries around the world adopt that, and hopefully that leads to a much more peaceful and fruitful world and lifestyle. Where can our viewers find you, follow you? I know we've been sharing your Twitter handle, but is there anywhere else that you'd suggest our viewers who wanted to know more about you to find you?
Find me in El Salvador in a few months, and if you know, I'm on Twitter obviously, and all my other stuff. It's very easy to find me online, but it's not as important these days. You know, probably Twitter, although I don't tweet that too much, but it's easy to find me. Here you go. Look, there's the Fed. It's about to say something.
Yeah. Thank you again for coming and joining us, Timothy. We're gonna give the mic now to Jerome Powell.
Thanks for having me.
Because of illness, quarantines, or caregiving needs. Fortunately, health experts are finding that the Omicron variant has not been as virulent as previous strains of the virus, and they expect that cases will drop off rapidly. If the wave passes quickly, the economic effects should as well, and we would see a return to strong growth. That said, the implications for the economy remain uncertain. And we have not lost sight of the fact that for many afflicted individuals and families, and for the healthcare workers on the front lines, the virus continues to cause great hardship. The labor market has made remarkable progress, and by many measures is very strong. Job gains have been solid in recent months, averaging 365,000 per month over the past 3 months. Over the past year, payroll employment has risen by 6.4 million jobs. The unemployment rate has declined sharply, falling 2 percentage points over the past 6 months to reach 3.9% in December. The improvements in labor market conditions have been widespread, including for workers at the lower end of the wage distribution, as well as for African Americans and Hispanics. Labor demand remains historically strong. With constraints on labor supply, employers are having difficulties filling job openings, and wages are rising at their fastest pace in many years. While labor force participation has edged up, it remains subdued, in part reflecting the aging of the population and retirements. In addition, some who would be seeking work report that they are out of the labor force because of factors related to the pandemic, including caregiving needs and ongoing concerns about the virus. The current wave of the virus may well prolong these effects. Over time, there are good reasons to expect some further improvements in participation and employment. Inflation remains well above our longer run goal of 2%. Supply and demand imbalances related to the pandemic and the reopening of the economy have continued to contribute to elevated levels of inflation. In particular, bottlenecks and supply constraints are limiting how quickly production can respond to higher demand in the near term. These problems have been larger and longer lasting than anticipated, exacerbated by waves of the virus. While the drivers of higher inflation have been predominantly connected to the dislocations caused by the pandemic, price increases have now spread to a broader range of goods and services. Wages have also risen briskly, and we are attentive to the risks that persistent real wage growth in excess of productivity could put upward pressure on inflation. Like most forecasters, we continue to expect inflation to decline over the course of the year. We understand that high inflation imposes significant hardship, especially on those least able to meet the higher costs of essentials like food, housing, and transportation. In addition, we believe that the best thing we can do to support continued labor market gains is to promote a long expansion, and that will require price stability. We're committed to our price stability goal. We will use our tools both to support the economy and a strong labor market, and to prevent higher inflation from becoming entrenched. And we'll be watching carefully to see whether the economy is evolving in line with expectations. The Fed's monetary policy actions have been guided by our mandate to promote maximum employment and stable prices for the American people. As I noted, the committee left the target range for the federal funds rate unchanged and reaffirmed our plan announced in December to end asset purchases in early March. In light of the remarkable progress we've seen in the labor market and inflation that is well above our 2% longer run goal, the economy no longer needs sustained high levels of monetary policy support. That is why we are phasing out our asset purchases and why we expect it will soon be appropriate to raise the target range for the federal funds rate. Of course, the economic outlook remains highly uncertain. Making appropriate monetary policy in this environment requires humility, recognizing that the economy evolves in unexpected ways. We'll need to be nimble so that we can respond to the full range of plausible outcomes. With this in mind, we will remain attentive to risks, including the risk that high inflation is more persistent than expected, and are prepared to respond as appropriate to achieve our goals. To provide greater clarity about our approach for reducing the size of the Federal Reserve's balance sheet, today the committee issued a set of principles that will provide a foundation for our future decisions. These high-level principles clarify that the federal funds rate is our primary means of adjusting monetary policy, and that reducing our balance sheet will occur after the process of raising interest rates has begun. Reductions will occur over time in a predictable manner, primarily through adjustments to reinvestments, so that securities roll off our balance sheet. Over time, we intend to hold securities in the amounts needed for our ample reserves operating framework. And in the longer run, we envision holding primarily Treasury securities. Our decisions to reduce our balance sheet will be guided by our maximum employment and price stability goals. In that regard, we will be prepared to adjust any of the details of our approach to balance sheet management in light of economic and financial developments. The committee has not made decisions regarding the specific timing, pace, or other details of shrinking the balance sheet, and we will discuss these matters in upcoming meetings and provide additional information at the appropriate time. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Federal Reserve will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you. For the first question, we'll go to Chris, your neighbor at the Associated Press.
Thanks, Michelle, and thank you, Chair Powell. So it's expected that the Fed will hike rates perhaps every other meeting, but certainly in the past, the Fed has hiked at every meeting. So I just wanted to ask, are rate hikes at consecutive meetings on the table this year? Is every meeting a live meeting? And on that note, would the Fed consider front-loading some of its rate hikes, even if it doesn't raise every meeting? Thank you.
Thanks. So as I referred to in my opening statement, it is not possible to predict with much confidence exactly what path for our policy rate is going to prove appropriate. And so at this time, we haven't made any decisions about the path of policy. And I stress again that we'll be humble and nimble. We're going to have to navigate cross currents and actually two-sided risks now. And I'll say also that we're going to be guided by the data. In fact, what I'll say is that we're going to be led by the incoming data and the evolving outlook. We'll try to communicate as clearly as possible, moving steadily and transparently. So, more to your question. We know that the economy is in a very different place than it was when we began raising rates in 2015. Specifically, the economy is now much stronger. The labor market is far stronger. Inflation is running well above our 2% target, much higher than it was at that time. And these differences are likely to have important implications for the appropriate pace of policy adjustments. Beyond that, we haven't made any decisions.
Thank you. Let's go to Victoria Guida at Politico.
Hi, Chair Powell. I wanted to ask, you were talking about the health of the labor market, and I'm curious whether you would characterize where we're at right now as maximum employment, and also along those same lines, obviously rate hikes on the table this year. Do you think that the Fed can raise rates, bring inflation under control without hurting jobs and wages?
Sorry, just getting both parts of your question written down. So I would say, and this view is widely held on the committee, that both sides of the mandate are calling for us to move steadily away from the very highly accommodative policies we put in place during the challenging economic conditions that the economy faced earlier in the pandemic. And I would say that most FOMC participants agree that labor market conditions are consistent with maximum employment in the sense of the highest level of employment that is consistent with price stability. And that is my personal view. And again, very broad support on the committee for the judgment that it will soon be appropriate to raise the target range for the federal funds rate. The other thing is maximum employment will evolve over time and through the course of the business cycle. In the particular situation we're in now, it may well increase. The level of maximum employment that's consistent with stable prices may increase, and we hope that it will as more people come back into the labor market, as participation gradually rises. And the policy path that we're broadly contemplating would be supportive of that outcome as well. So the thing about the labor market right now is that there are many millions of more job openings than there are unemployed people. So you ask whether we can raise rates and move to less accommodative and even tight financial conditions without hurting the labor market. I think there's quite a bit of room to raise interest rates without threatening the labor market. This is, by so many measures, a historically tight labor market. Record levels of job openings, of quits. Wages are moving up at the highest pace they have in decades. If you look at surveys of workers, they find jobs plentiful. Look at surveys of companies, they find workers scarce. And all of those readings are at levels really that we haven't seen in a long time, and in some cases ever. So this is a very, very strong labor market. And my strong sense is that we can move rates up without having to severely undermine it. I also would point out that there are other forces at work this year which should also help bring down inflation. We hope, including improvement on the supply side, which will ultimately come. The timing and pace of that are uncertain, and also fiscal policy is going to be less supportive of growth this year, not of the level of economic activity, but the fiscal impulse to growth will be significantly lower. So there are multiple forces which should be working over the course of the year for inflation to come down. We do realize that the timing and pace of that are highly uncertain, and that inflation has persisted longer than we thought. And of course, we're prepared to use our tools to assure that higher inflation does not become entrenched.
Thank you. Let's go to Nick Timros at the Wall Street Journal.
Good afternoon, Chair Powell. Nick Timros at the Wall Street Journal. I have a couple of questions on the balance sheet. The statement on the balance sheet today calls for significantly reducing your holdings. What does that mean? And then, apart from moving sooner and faster to shrink the holdings, are there any other ways in which you and your colleagues are seriously thinking about recalibrating this process? And finally, how much disagreement is there around how you should use this tool, including active sales rather than passive sales, or changes in the composition of reinvestments? Thank you.
So I'm afraid to tell you that those are all great questions, and they're questions that the committee is just turning to now. So we had a discussion, as you know, at the last meeting, an introductory discussion of the balance sheet and a teeing up of the issues. At this meeting, we've gone through and carefully put together a set of principles at a high level, and those are meant to guide the actual decisions we'll make about the pace and about all of the questions that you're asking. And I expect that this process will be something that we spend time on in coming meetings. I can't tell you how many, I can't tell you how long it will take, and then, you know, at the appropriate time, we'll provide additional information. So I did, the last cycle when we went through balance sheet issues, we did find that over the course of 2 or 3 meetings, for example, we did come to interesting and better answers, we thought. So we're just in that process now, and at the next meeting, we'll be turning to, you know, more of the details that you're asking about. I would say this: the balance sheet is much bigger. It has a shorter duration than the last time, and the economy is much stronger, and inflation is much higher. So, and I think that leads you to, and I've said this, being willing to move sooner than we did in the last time, and also perhaps faster. But beyond that, it's really not appropriate for me to speculate exactly what that would be. But I would point you to principle number 1, which is the committee views changes in the target rate for the federal funds rate as its primary means of adjusting the stance of monetary policy. So we do want the federal funds rate, we want to operationalize that, and we want the balance sheet to be declining in a predictable manner, and we want it to be declining primarily by adjusting reinvestments.
So if I could follow,
he said he's not going to speculate after everything he speculates on.
The economy policy. How should we think about the relationship between the two? For example, how much passive runoff is equal to every 1/4 percentage point increase in your benchmark rate?
So again, we think of the balance sheet as moving in a predictable manner, sort of in the background, and that the active tool meeting to meeting is not both of them, it's the federal funds rate. There are rules of thumbs, I'm reluctant to land on one of them that equate this, but there's also an element of uncertainty around the balance sheet. I think we have a much better sense, frankly, of how rate increases affect financial conditions and hence economic conditions. Balance sheet is still a relatively new thing for the markets and for us, so we're less certain about that. So again, I think the pattern we'll follow is to arrive at a timing and a pace and composition and all those things, and then announce that with advance notice, and it will start in the background, and then we'll look to have that just running in the background and have the interest rates again be the active tool of monetary policy. That's at least the plan. I can't tell you much more about any of the very good issues about size, pace, composition, those sorts of things. And we'll be turning to all of those at coming meetings.
Thank you.
Thanks. Now we'll go to Neil Irwin.
Thank you, Chair Powell. It's Neil Irwin from Axios. Glad to be back. Sir, I was wondering if the volatility we've seen in financial markets in the last few weeks strikes you as anything alarming or that might affect the trajectory of policy. Conversely, to the degree that financial conditions have tightened some, might that be desirable in some ways in achieving your tightening goals?
So, as you know, the ultimate focus that we have is on the real economy, maximum employment and price stability, and financial conditions matter to the extent that they have implications for achieving the dual mandate. And you also know that we look at broader financial conditions, not one or two things, one or two markets. And what we're always asking ourselves is, are we seeing changes that are both persistent and material enough that of a change in financial conditions that they are inconsistent with the achievement of our goals? So that's how we're looking at that. And I don't want to comment on today's financial conditions broadly, but we're not looking at any one market or so. So that's how we're thinking. In terms of what we've seen, I would say this: we said at our last meeting we published a summary of economic projections, the median participant expected 3 rate increases this year, and it's 6 weeks, 7 weeks later now, and you have seen that our communication channel with the markets is working. Markets are now pricing in number of rate increases. Surveys show that market participants are expecting a balance sheet runoff to begin, at the appropriate time, sometime later this year, perhaps. We haven't made that decision yet. So we feel like the communications we have with market participants and with the general public are working, and that financial conditions are reflecting in advance the decisions that we make. And monetary policy works significantly through expectations. So that in and of itself is appropriate.
Thank you. Let's go to Howard Schneider.
For a year, hi, thanks, Chair Powell. Howard Schneider with Reuters. So for a year now, the statements referenced the benchmarks for this initial interest rate increase. Now that we're approaching that moment, what are the benchmarks going to be for subsequent rate increases? I know you can't stipulate the path, but how should we think about the criteria for the next step and the next step?
Well, you're right. We haven't gotten to that point yet. We haven't made a decision yet, and we'll make that decision at the March meeting. We'll make a decision whether to raise the federal funds rate. I would say that the committee is of a mind to raise the federal funds rate at the March meeting, assuming that conditions are appropriate for doing so. We have our eyes on the risks, particularly around the world, but we do expect some softening in the economy from Omicron, but we think that should be temporary, and we think that the underlying strength of the economy should show through fairly quickly after that.
If I could follow, just a related question, the December SEPs had this copacetic sort of set of circumstances where inflation comes down without the federal funds rate ever getting over the estimate of neutral. Given developments since then, do you still think that's a credible narrative for the ultimate path to policy?
Path is highly uncertain, and that we're committed to using our tools to make sure that inflation, high inflation that we're seeing, does not become entrenched. So a number of factors would be, it's not just monetary policy. A number of factors are supporting a decline in inflation. As I mentioned, fiscal policy will providing significantly less of an impulse to growth. We do expect this year, although we do expect now that it will come slower than we had expected and hoped, that there will be relief on the supply side. So that too should lower these supply side barriers, which are a big part of the story why inflation is high. In addition, monetary policy will be becoming significantly less accommodative. So the question is, we'll be asking this question all year long, and that will be, are things turning out as we expect? There's a case that for whatever reason, the economy slows more and inflation slows more than expected. We'll react to that. If instead we see inflation at a higher level or more persistent level, then we'll react to that. And again, we're well aware that this is a different economy than existed during the last tightening cycle, and our policy is going to reflect those differences.
Thank you. Let's go to Gina Smialek. Let's go to Gina. Okay, let's go to Steve Leisman.
Thank you, Mr. Chairman. Mr. Chairman, I have one sort of technical question and one question on principle. The technical question is, if you're going to discuss balance sheet at next upcoming meetings and you won't begin balance sheet reduction until after you begin rate hikes, it seems to technically mean that you won't or can't begin balance sheet reduction until the summer. Is that correct? That's the first thing. Second of all, you suggested that the with balance sheet running in the background, that you would possibly be raising rates and running off the balance sheet at the same time. that's sort of the technical question part of it. The principal question I have is, you said it's going to be running in the background, but the statement on balance sheet principles says the committee is prepared to adjust any of the details of its approach based on economic and financial developments, which suggests there's something of a reaction function associated to the balance sheet, and it won't be running in the background. So could you give us any a sense of the discussion or staff presentation on what is the reaction function surrounding the balance sheet? Thanks.
So let me start by talking about that last paragraph. So you'll remember during the last cycle that this process of building up and then shrinking the balance sheet is a complicated one, and it involves inevitably surprises. And so during the prior cycle, we amended our balance sheet principles a number of times. Now, we didn't intend to do that. Events required us to do so. So we got a pretty robust paragraph there that says we're free to do this at any time. And it doesn't mean we're going to, but if the situation turns out to be different than we had thought, we're not going to stick with something that isn't working. That's all that's saying. It's meant to be quite a general statement rather than a hint. So, I mean, I like to think that our philosophy of the balance sheet is embodied in these principles. So, the idea that, for example, the federal funds rate is the primary means of adjusting the stance of policy. It will determine the timing and pace of reducing the size of the balance sheet to foster the dual mandate. That will begin to reduce the size after we begin the process of raising rates, and on like that. I mean, those are all the things that try to describe how we will proceed. But it may be at a higher level to try to get at your question. Asset purchases were enormously important at the beginning of the recovery in terms of restoring market function, as they were right after in the critical phase of the global financial crisis. And then after, they were a macroeconomic tool to support demand. And now the economy no longer needs this highly accommodative policy that we put in place. So it's time to stop asset purchases first, and then at the appropriate time, start to shrink the balance sheet. Now, the balance sheet is substantially larger than it needs to be. We've identified the end state as in amounts needed to implement monetary policy efficiently, effectively in the ample reserves regime. So there's a substantial amount of shrinkage in the balance sheet to be done. That's going to take some time. We want that process to be orderly and predictable. And so those are some of the ways I would think this lays out our, the way we're thinking about this. In terms of the timing, I can't really help you. It just says after we get underway. So I would say we're going to have another discussion at the next meeting. And my guess is we'll have at least one other discussion at the meeting after that. And, we'll tell you as we make progress, and we'll start the process of allowing runoff and shrinking the balance sheet at what we find to be the appropriate time. I wish I could say more, but honestly, we haven't made those decisions, and we actually haven't even really had the important discussions on a lot of the details that we will have at coming meetings.
Thank you. Let's go to Craig Torres.
Chair Powell. Chair Powell, good afternoon, Michelle and Chair Powell. Craig Torres from Bloomberg. Chair Powell, at the beginning of the conversation, you said risks are two-sided. I'm wondering if you can elaborate on what are the risks to the elusive soft landing. Is Fed policy a risk over tightening, or what are the risks? And then second, Chair Powell, I have a quick administrative question. Robert Kaplan's disclosure of his securities transactions. In a couple months, Chair Powell, or maybe sooner, you and I will file our tax returns and we'll list transactions and all kinds of things. And next to those transactions, we'll put dates. And Bloomberg asked for the dates of Mr. Kaplan's transactions. The Dallas Fed is not giving us the dates. And I don't see why this is a matter for the Inspector General or anybody else. I mean, why can't he give us the dates? Will you help us get the dates of those transactions? Thanks.
So You asked about the risks first. So, the one risk is that inflation risks are still to the upside in the views of most FOMC participants, and certainly in my view as well. There's a risk that the high inflation we're seeing will be prolonged. There's a risk that it will move even higher. So, and we don't think that's the base case, but you ask what the risks are, and we have to be in a position with our monetary policy to address all of the plausible outcomes, and that calls for us to be in position. We have an expectation about the way the economy is going to be evolved, but we've got to be in a position to address different outcomes, including the one where inflation remains higher. And of course, that is a risk to the expansion. We've been saying that what we need here is another long expansion, which is the kind of thing we saw over the last, which is the record long expansion. We saw labor force participation rise. We saw wages persistently higher for people at the lower end, and there really was no obvious imbalance in the economy that threatened that expansion. It could have gone on for years were it not hit by the pandemic. So we'd love to find a way to get back to that. That's going to require price stability, and that's going to require the Fed to tighten interest rate policy and do our part in getting inflation back down to our 2% goal. So I mentioned two-sided risks. A couple of things. One, the COVID is not over, and COVID can continue to evolve, and it's just we have to accept that it's not over, and the risks to it can slow down growth, and that's sort of a downside risk from a growth standpoint. I would point to another risk is just further problems in the supply chains, which could slow down activity. And you see the situation in China as a situation there where that's their no COVID policy may cause more lockdowns, is likely to, and that may play into more problems in supply chains. In addition, there's what's going on in Eastern Europe and things like that. So there's plenty of risk out there, and we can't forget that there are risks on both sides. So that's there. That's what I would say. I know you've been all over this issue with my colleagues, Craig, on the issue of information. We don't have that information at the board, and I asked the Inspector General to do an investigation, and that is out of my hands. I'm playing no role in it. I seek to play no role in it, and I can't help you here today on this issue, and I'm sorry I can't.
Okay. Thank you. We'll go to Gina now.
Thanks for taking our questions, Chair Powell, and sorry for my tech issues. I wonder if you could tell us a little bit about where your thinking on inflation stands today. The last time we saw an SEP back in September, we saw that you and your colleagues were projecting that inflation would sort of sink back down quite close to target by the end of the year. And I wonder if you still think that projection from December is a reasonable one, and if your thinking has changed at all, I wonder how you're thinking about that. And I also wonder if you could talk a little bit about the pathway to getting to that deceleration. Like how do we get from here, 7% CPI, to where you expect to be at the end of the year?
So I'd say, since the December meeting, I would say that the inflation situation is about the same, but probably slightly worse. I'd be inclined to raise my own estimate of 2022 core PCE inflation. Let's just go with that by a few tenths today. But we're not writing down an SEP at this meeting, but I think it hasn't gotten better. It's probably gotten just a bit worse, and that's been the pattern. So I think if you look at the FOMC participants, there's a range there, and that range has been moving to the right for a year now. And by the way, if you look at other forecasters, essentially all other macro forecasters who do this for a living, you've seen the same pattern. So what do we think about that? Well, I think we wrote down rate increases in the December meetings, each of us individually. And I think to the extent the situation deteriorates further, our policy will have to address that. if it deteriorates meaningfully further, either in the time dimension or in the size of the inflation dimension. So that's how we're thinking about it. As I mentioned, though, I think it's part of this will be that the Fed moving away from a very highly accommodative policy to a substantially less accommodative policy, and then over time to a policy that's not accommodative in time. I don't know when that will be. Those are the things that we're thinking about. That's part of it. Another part of it is that fiscal policy provided an impulse to growth over the last 2 years. That impulse will be less. In fact, will be negative this year. And so that's another thing. The other one is we will eventually get relief on the supply side, and the ports will be cleared up, and there will be semiconductors and things like that. Now, what we're learning is it's just taking much longer. So I think longer than expected, and that I think does raise the risk that high inflation will be more persistent. I do think we'll come off of the highs that we saw in the early part of this episode in the spring last year, but really the question is going to be what is inflation running at, and so we'll be watching that. And our objective is to get inflation back down to 2%. It's also to provide enough support to keep the labor market healthy. The labor market is very, very strong right now. And I think that strength will continue. There's really a shortage of workers. We see it particularly among production and non-supervisory workers and people in the lowest quartile. You see very large wage increases. I mentioned some of the other indicators. So I think that's what we're looking at. And we're also, we realize, I think, as everyone does, that this outlook is quite uncertain and that we're going to have to adapt. And we're going to communicate as clearly as we can, but we're going to have to be adaptable and move as appropriate.
Great, thank you. Thank you. Let's go to Colby Smith.
Thank you, Michelle. Chair Powell, when you talk about being humble and nimble about the path forward for monetary policy, does that also include the possibility of raising interest rates by larger increments and, say, doing a 50 basis points hike at some point if inflation does not moderate sufficiently? And should we interpret this approach as a departure from the gradual pace that we saw during the last hiking cycle?
So, as I mentioned, we have not made these decisions. We really haven't. And what I can tell you now, though, is that we fully appreciate that this is a different situation. If you look back to where we were in 2015, 16, 17, 18, when we were raising rates, inflation was very close to 2%, even below 2%. Unemployment was not at our estimates of the natural rate, and growth was in the 2 to 3% range. Right now, we have inflation running substantially above 2%, and more persistently than we would like. We have growth even in forecasts, even in the somewhat reduced forecast for 2022, we still see growth substantially higher than what we estimate to be the potential growth rate. And we see a labor market where, by so many measures, it is historically tight. I think in a way, the least tight aspect of it is looking at the unemployment rate, which is still below our median estimate of maximum employment. If you look at things like quits and job openings, as I mentioned earlier, and wages, you're seeing, and just the ratio of job openings to unemployed, you're seeing a very, very tight labor market. Now, we also know that labor force participation is significantly lower. It's 1.5 percentage points lower than it was in February of 2020. Maybe 1 percentage point of that is retirements. Some part of those retirements are related to COVID rather than just regular retirements. So we think there is a pool of people out there who could come back into the labor force, but it's not happening very quickly, and it may continue to not happen very quickly as long as the pandemic is on. So that's how we think about that. We haven't made, to your specific question, we really have not addressed those questions, and we'll begin to address them as we move into the March meeting and meetings after that.
Let's go to Rachel.
Let's go, Rachel.
Thank you, Michelle, and thank you, Chair Powell, for taking our questions. I'm wondering
if you can talk to us about any metrics that the Fed uses to assess how inflation affects different groups of Americans, especially lower income earners. And are you worried that the Fed underestimates or can't effectively measure the impact of inflation on some of the most vulnerable households?
Rachel's 12 years old.
So it's more a matter of I think the problem that we're talking about here is really that people are on fixed incomes who are living paycheck to paycheck. They're spending most or all of what they're earning on food, gasoline, rent, heating, things like that, basic necessities. And so inflation right away forces people like that to make very difficult decisions. So that's really the point. I'm not aware of inflation literally falling more on different socioeconomic groups. That's not the point. The point is some people are just really prone to suffer more. I mean, for people who are economically well off, inflation isn't good. It's bad. High inflation is bad, but they're going to be able to continue to eat and keep their homes and drive their cars and things like that. It's more so that's really how I think of it. And we control inflation for the benefit of all Americans, but part of it is just that it's particularly hard on people with fixed incomes and low incomes who spend most of their income on necessities, which are experiencing high inflation now.
Thank you. Let's go to Edward Lawrence.
Thanks, Michelle, and thank you, Mr. Chairman, for taking the question here. So year over year, inflation's at a 40-year high. The input costs for producer price index for all of 2021 was the highest on record. Some investors fear that the Fed might be moving too late. Now, you said no decisions were made on the path of rate hikes, but was a rate hike more than 25 basis points discussed today? And as a follow to that, because I have problems with the mute button, as a follow to that, you testified that the supply chain issues could be worked out by the end of the year. You talked about that today. The CEO of Ford, though, told Fox Business today that the chip shortage will last into 2023. So today you said inflation will start to ease this year. I want to drill down and get a timeline that you see as to when we could see that relief. Thank you.
So I would not say that I would expect the supply chain issues to be completely worked out by the end of this year. I do not expect them, and I have not expected them. What I would say, and I have been saying, is that I expect progress to be made in the second half of this year, mainly. Progress, because we're not making much progress. If you look at a ton of metrics, you can find some that suggest that delivery times are shorter and inventories in some industries moving up, but overall, we're not making progress. And things like the semiconductor issue they're going to be quite a long time. I would think they'll go more than through 2023. In terms of being too late, I would just say this: our policy needs to be positioned to address the full range of plausible outcomes, as I said, and particularly the possibility that inflation will continue to run higher more persistently than we'd expected. And we think we are positioned to make the changes in our policy to do that, and we're committed to doing that. And that's really where we are. In terms of your question about the size of rate increases, we haven't faced those decisions. We haven't made them. It isn't possible to sit down here today and tell you with any confidence what the precise path will be. But as we work our way through this meeting by meeting, we are aware that this is a very different expansion, as I've said a couple of times, with higher inflation, higher growth, a much stronger economy. And I think those differences are likely to be reflected in the policy that we implement.
Thank you. Let's go to Mike McKee.
Thank you, Mr. Chairman. I'd like to sort of weave some of the strands of your answers together and ask you, as you start to reverse policy, what your goal is. Are you going to be raising interest rates until you get inflation to 2%? Do you want to go below 2% so that on average you get a 2% inflation rate? And because you said we have to protect the employment part of your mandate, is there some sort of circuit breaker that would stop you from raising interest rates on the employment side?
So no, there's nothing in our framework about having inflation run below 2%. So that we would do that, try to achieve that outcome. So the answer to that is no. What we're trying to do is keep inflation expectations well anchored at 2%. That's always the ultimate goal. And we do that in the service of having inflation. We get to that goal by having inflation average 2% over time. And if inflation doesn't average 2% over time, then it's not clear why inflation expectations would be anchored at 2%. So that's the way we think about that. What was the last part of your question?
I was asking if you're protecting the employment side of the mandate, whether there's some sort of circuit breaker there.
Nothing like that. I mean, I would say you have a tremendously strong labor market, and you have growth this year at forecast to be well above potential. I mean, people are forecasting growth. You think potential growth is around 2. Most forecasts are significantly above that for 2022. And that's even with policy becoming substantially less accommodative. So the labor market's going to be strong for some time. We ideally, what we're trying to achieve is inflation getting back down to 2%. And we're trying to do that in a process that accomplishes, that will also leave the labor market in a very strong position. And no one really knows what that will take. Again, I would say that it isn't just monetary policy that's helping inflation get down. It'll be supply side improvements, and it'll be less fiscal impulse, in all likelihood. So, but monetary policy will do our job. It is our job to get inflation down to 2%. And a situation where the two goals can be in tension is a difficult one. But I don't really think they are here, though, because I think a really significant threat to further strengthening the labor market in the form of higher participation over time is high inflation. And also high inflation is taking away the benefits of some of these large wage increases that we're seeing now. So we do hope to achieve, and our plan is to achieve both of those goals.
If I could follow up, does the danger of tightening too much as policy works its way into the economy with a lag mean that you should go back to being more forecast dependent in making decisions rather than the state dependency you've been using as a framework for the last year and a half or so?
Dependency was particularly around the thought that if we saw a very strong labor market, we would wait to see actual inflation before we tightened. And so that was a very state-dependent thought, because for a long time we've been tightening on the expectation of high inflation, which never appeared. And that was the case for a number of years. So in this particular situation, we will be clearly monitoring incoming data as well as the evolving outlook.
I can't, I'm just talking now, but he just is lying to us. It's constant lies. That's my 2 cents. This is just making me really angry.
I mean, that is what it is. But do you feel that monetary policy and fiscal policy maybe did too much to react to the crisis, and that part of the inflation problem that we're having right now is because the government response, collectively was more than what the economy ended up needing?
So I think it's too soon to write that history, really. But what I would say is this: if you remember what it felt like at the beginning of the pandemic, literally the global economy shutting down in large part, including our own economy, and people going to their homes for weeks on end in masks, and there are no vaccines, and it could be a really long time to get them, and then you have economic activity drops by a shocking amount in one quarter. So there was a real risk of lasting damage. And I think Congress responded remarkably with the CARES Act, incredibly timely, very powerful. There'll always be flaws in these things, but in real time, it was a remarkable achievement. And we responded, and what we were able to do was, stave off a collapse of the financial system at the beginning and make time for what really needed to happen, which was the income replacement and then the recovery that Congress enabled with the CARES Act. So now that was a lot. And what we did was a lot. And, what we have now is we have the strongest recovery of any country, and we have a recovery that looks completely unlike other recoveries that we've had because we've put so much support behind the recovery. And we're managing the relatively high class problems that come with that, which are high inflation and a labor shortage. So, and these are serious problems, very serious problems that we're working as hard as we can on. Was it too much? Again, I'm going to leave that to the historians. But in 25 years, we'll look back at this incident, which will be a 2, 3, 4, 5 year period, and we'll say, we'll have a much better basis to make a judgment about the actions that people took. But it was all founded, though, in a very strong reaction to a unique historical event. And I guess I'll have to leave it at that. I hope I'll be around to see how that looks in 25 years.
Fair enough. Thank you.
Thank you. Let's go to Jean Young.
Thanks, Michelle. Chair Powell, some investors are expecting the yield curve could flatten or even invert after rate hikes begin. Would that worry you? And how important is that risk in the Fed's consideration for adjusting policy?
So we do monitor the slope of the yield curve, but we don't control the slope of the yield curve. Many factors influence longer term interest rates. But it is something that we watch, and you will know that from when we had this issue a few years ago. And we take it into account along with many other financial conditions as we try to assess the implications of all those conditions for the economic outlook. So that's one thing I would say. Another is currently you've got a slope, if you think about 2s to 10s, 2-year Treasury to the 10-year Treasury, I think that's around 75 basis points. That's well within the range of a normal yield curve slope. So it's something we're monitoring. We don't think of it as, I don't think of it as some kind of an iron law, but we do look at it and try to understand the implications and what it's telling us. And it's one of many things that we monitor.
Can I follow up real quick and ask if it did invert, would you tie it to U.S. fundamentals, or would it be driven by a much broader set of factors?
That's a good question in real time. Obviously, U.S. long-term sovereign debt is an important global asset, and the fact that our rates are so much higher than other risk-free sovereign rates around the world may put something of a ceiling on our rates. I don't know, but it would really depend on the facts and circumstances at that time.
Thank you. Let's go to Brian Chung for the last question.
Jerome Powell, Brian Chung, Yahoo Finance. Within the context of just the broad effort to normalize rates, would you describe what you want to do as a gradual hiking? And then secondly, within the context of hiking cycles, it's often the talking point for financial stability and wanting to make sure that asset bubbles don't merge. Is that something that has also factored into the conversation as you start to think about hiking rates? Thanks.
I would describe what we're doing along these lines. This is going to be a year in which we move steadily away from the very highly accommodative monetary policy that we put in place to deal with the economic effects of the pandemic. And that's going to involve a number of things. It's going to involve, and it does involve, finishing asset purchases. It's going to involve lifting off, and it's going to involve additional rate increases as appropriate. And we're going to write down in March our next assessment of what that might be. It's going to continue to evolve as the data evolve. We need to be quite adaptable, I think, in our understanding of this. The last thing we're going to do is we're going to have a couple more meetings, I think, to talk about allowing the balance sheet to begin to run off and do so in a predictable manner. And that's something that we will also be doing as appropriate. And I I don't think it's possible to say exactly how this is going to go, and we're going to need to be, as I've mentioned, nimble about this. And the economy is quite different this time. I've said this several times now. The economy is quite different. It's stronger. Inflation is higher. The labor market is much stronger than it was, and growth is above trend even this year, let alone last year. So all of those things are going to go into our thinking as we make monetary policy. And you asked about financials. Do we have concerns in connection with our policy? Is that your question?
Yeah, within the context of other hiking cycles, it seems like worries about asset bubbles emerging as a result of easy rates has been part of that. I didn't know if that was part of the discussion today.
I would just say this. We of course have a financial stability framework, and what it shows is a number of positive aspects of financial stability. But you mentioned really asset prices is one of the four. So asset prices are somewhat elevated, and they reflect a high risk appetite and that sort of thing. I don't really think asset prices themselves represent a significant threat to financial stability, and that's because households are in good shape financially than they have been. Businesses are in good shape financially. Defaults on business loans are low and that kind of thing. The banks are highly capitalized with high liquidity and quite resilient and strong. There are some concerns in the non-bank financial sector around money market funds, although the SEC is has made some very positive proposals there. And we also saw some things in the Treasury market during the acute phase of the crisis, which we're looking at ways to address. But overall, the financial stability vulnerabilities are manageable, I would say.
Thank you very much.
Thank you.
Hated every second of that. That was like the most, let me blow smoke up your butthole and say whatever I can say without committing or promising anything. Like the sheer fact that this man is going to go on this stage and say anything to the tune of, oh, I don't know what effect this is going to have. I don't know what the future holds. When you have quite literally made decisions that have impacted in a negative way, and you have gotten on stage in the past and lied and said inflation is going to be transitory. You've lied and said inflation is not going to be a problem. And then at the same time, here we are, and you are trying to counteract those issues that you caused. I'm going to mute myself because I might just start a slur of curse words and not making sense. Alex, I don't know if you had any takeaways or thoughts of what Powell was not saying, but that was pretty much the gist of what I took away from this. Was it was a lot of, I'm not going to say this. No, Casey, Shawn, before you guys go off into your own little world, if you guys want to chime in and help me not go on like an angry rant before I become like a viral sensation for cursing out Jerome Powell for yet again debasing the dollar even further and costing me thousands of dollars in my account.
I mean, it sounded just like a lot of deflection to me. He kept saying, we haven't made that decision yet. We haven't made that decision yet. Or we need to talk about that at a later meeting. I don't know. It seemed like probably exactly what we should have expected out of like the current conditions we have where they're stuck between a rock and a hard place. But I'm kind of with you on the frustration there, especially when he says things like, we know the family financial, status is good, whereas, maybe the whatever other market he's concerned about isn't. And we know for a fact that families are suffering. We know for a fact, like anecdotally, talk to anyone, everyone is feeling inflation. It really was a frustrating thing. It's hard to kind of put it out there, but I'm with you, Q.
I want to say something because I see this in the comments, and I'm not trying to cut you off, Shawn, but no, BTCN SDAP, whatever your name is, you are absolutely wrong. Powell and the Fed decided back in March of 2020 to print dollars without running it through Congress and pumping up the stock market. We never talk about that. We never discuss the trillions of dollars the Fed printed without the consent of the government, without our consent as citizens, to then debase the dollar. We talk about all the bills that got passed, all the billions that Congress, or trillions that Congress spends, but we don't talk about any of the money, any of the trillions of dollars that the Fed printed and the Fed has done to debase the dollar. We continue to blame Yellen. We continue to blame Biden. We blame Trump. We blame everyone except for Powell when he is literally the money printer. That is my rant. Shawn?
Yeah,
There's
no,
a lot
it's
to
just,
rant about, my man.
it's damage
is,
control. Like whenever he talks about, I think I've written an article on every FOMC meeting for the past like 5 or 6, and every time it's the same thing. It's just damage control. Like you could hear him say, "All right, I was a little bit wrong. I might want to adjust where I'm going to put inflation. I might adjust it a couple of tenths." So it's like, I'm going to admit that I'm wrong, but I'm not going to admit how wrong that I am, because otherwise these markets will bleed worse than the current, red wedding that we that we currently see. So
It's always retroactive. It's never proactive. And that sounds like simplistic, but it's the truth. They're always doing damage control. They've been kicking the can down the road for 100 years. And it's just going to continue. It's like, how could you not listen to a charade like that and decide to just take your dollars off the table altogether and just put them in an orthogonal system called Bitcoin? It's maddening. This song and dance that they come on and do as if they have any credibility left.
I think that's the thing too, right? Is we're left with no real clear direction on this. These meetings are designed to address questions, and really they just raise more. And I don't know. It's really it's hard to watch like the entire nation really. No one does anything about it. Like you said, Q, we all just accept that we printed this money and that Jerome, we can go on these question live streams, and it doesn't matter if he deflects, doesn't matter if he doesn't even answer the question that you're really asking, and doesn't matter if he doesn't really have like a good answer for what's going on. We just seem to like continually accept what's going on. It's just difficult.
Yeah, I mean, we'll be diving into this a lot more, and I don't want to take away from this upcoming segment with Casey and Shawn, but the last point that I was listening to that whole thing, and I don't really think he made this abundantly clear, but in the actual like press release written statement that the Fed put out, it's important to note that they wrote, and I'm just going to quote this now: "With inflation well above 2% and a strong labor market, the committee expects it will soon be appropriate to raise the target range for the federal funds rate," i.e. rates are going up from that 0 to 0.25% range. And then also the committee decided to continue to reduce the monthly pace of its net asset purchases, bringing them to an end in early March. That's 5 weeks away. We're talking like they're done in 5-6 weeks. This is a direct line of what the markets have been afraid of, what they have frankly been expecting, because this promise that we're going to taper slowly over the course of all of 2022 and probably end at the end of the year or top of 23, we're going to be done with it in Q1 of 22. We're not done sliding. I do not believe we are done on the downside. I'd say that, and then literally the market's going to go back up. But
I'm with you there, Q. If we're ready, I think we can move on to our more happy topic here of meet the plebs. Let off a little steam, everyone. And we do have a fantastic guest today. Before we get into it, I have to say, guys, and you might have heard this phrase before: "I'm not mad, I'm just disappointed." Well, I'm going to be mad and disappointed if you're not at Bitcoin 2022. I'm serious. I'm going to find you, and I'm going to make sure you go to Bitcoin 2022. So I think we have a code YTMAG. I think there was one that was more than that, but maybe I'm wrong. But yes, absolutely.
No, that's the biggest one. Sorry to interrupt. You have to use code YTMAG like tonight to get 21% off your tickets.
Yes, you heard him, guys. YTMAG. You got to get it. That code is not going to be around forever. And I think, like you said, it's ending very quickly here tonight, potentially. So get your tickets. It's definitely going to be a great time. But without further ado, Mr. Shawn Amick, welcome to Meet the Plebs. It's great to have you on here.
Yeah, man, thanks for the invite. I was really excited to come on.
Yeah, no, I mean, you have submitted some fantastic articles to us, like a real variety, and it seems like you've got your hand in many places in Bitcoin right now. Jumping right into it, though, I'm curious if you could just tell us a little bit about yourself, how you got into Bitcoin, and what's brought you down this path.
Yeah, so it was probably the tail end of 2019. Like, I just saw that over the course of time, like my money was just being devalued, and I was starting to figure out how to invest, and I'd gotten pretty good at, playing the stock market. And then, looking through the boom and bust cycles, I just realized that wasn't really a good long-term store of wealth. And I started trying to look elsewhere, and I don't know the exact thing that pointed me to Paul's podcast. I know that he's got a mixed bag of emotions with Bitcoiners, but that was kind of the first thing that I saw on Twitter, and through something that he posted, I saw the Bitcoin Standard, and then I bought the Bitcoin Standard, treated it a bit like a Bible, and really just kind of dove in, and I started buying all the books that I could, and I started trying to find all the podcasts that I could listen to so I could understand it. I eventually actually joined that Palm course, and at the time I wouldn't have labeled myself as like a Bitcoin maxi at all. In fact, I actively railed against that category. But then by the end of it, I made a couple of friends, started a podcast, with Alan, who works at Bitcoin Incorporated, and as it progressed, I definitely became more and more aggressive towards altcoins and towards whatever mission statements or use cases that they said that they were going for, and finding a lot of the fallacy in a lot of those other projects. And it eventually led me to becoming a pretty hardcore Bitcoin maxi, at which point I'd already been a writer prior to that. Like, I'm a fiction author, and I spent the majority of like my latter half of high school and going into college focusing on writing as a way to learn. So if there was a thing that I didn't understand, like I was writing a book at one point about law enforcement, and I wound up doing, I think, like 10, 15 different interviews with different police officers at the local area that I lived at the time, just trying to make sure that I was getting it right. And I started realizing the more that I wanted to write, the more that I wanted to get things right. And I wanted to kind of speak truth into the thing that I was trying to talk about. And I realized as I was learning more and more about Bitcoin that was going to be the best way for me to kind of learn more and more about it. So every time I came to a question that I couldn't find the answer to, I started writing an article about it.
I mean, what better way to get into Bitcoin? Definitely, those top of the funnel aspects of the Bitcoin community, like Pomp, regardless of your feelings on that, I think they play such an important role because it just catches a wider audience, and there's such a wider net to be put out there. Like I said, regardless of your feelings on the content, it obviously brings in people who may or may not turn into Bitcoin maximalists, people who really work on Bitcoin and write for Bitcoin. So I think there's something to be said for those tops of funnels. That's cool that you did the podcast with Alan. I didn't know that. And Alan has been on the show once before with us. He was great. And I'm definitely in agreement with you on using the Bitcoin Standard as a Bible. That was definitely my source of writing information for the first 6 months of what I was doing here. But I'm curious, Shawn, you mentioned that prior to this, you were a fiction writer. Could you talk a little bit about how your work in fiction writing has sort of blended with your work in Bitcoin?
Yeah, it's actually haven't really talked about this much. So the series, the only published novel that I have out is called Dick, Stan Green. Basically, if Sherlock Holmes was horrible at his job and smoked a lot of weed. It's focused on self-sustainability, kind of what happens whenever green energy requirements out of a city create burdens for business owners, and kind of what that looks like whenever the state's kind of putting their overreaching hand on businesses. As I've delved into Bitcoin and the finances behind everything, and I became obsessed with Austrian economics and trying to learn all of these different things throughout the story, because it's a co-authorship. Me and my co-author have been discussing ways to make sure that we have emergent technology present in the story that we're telling. And I had very much expected forms of digital currency to take precedent in the next book in the series. And through my writing, because my co-author's been reading all of my articles, and through all the articles and all the discussions that we've had, we found that it's actually going to be able to be a pretty core point to the next story that we want to tell within that series, and what happens when the state overreaches, what happens whenever an emerging tech allows for a parallel option to exist. So it's definitely affected my fiction writing. It's definitely affected the way that I discuss centralized authority, the way that I just discuss really any form of bureaucracy to any point, and just trying to make sure that there's always a form of skepticism for whatever existing infrastructure is there.
Well, that's really interesting. I mean, I think it's awesome how you're sort of taking like the ethos of Bitcoin and applying it not just to like, oh, let's have Bitcoin in the book, but how do you write this book about, maybe totalitarianism or authoritarianism, and what has Bitcoin taught you about that? And you implement that. So that's really awesome. And I personally would love to see a lot more Bitcoin like related fiction pieces, because I'm a big fiction reader. So that would be awesome, and looking forward to that. Moving along though, I'm curious if you could describe like the sort of life lessons that you've taken from Bitcoin. Many people talk about how it's changed their ideas or beliefs. So I'm curious if you could just describe, the effect Bitcoin's had on you in that way.
I think it's the effect that it's had on me seems to be the opposite effect that it has on most people. Most people in this space, and I in no way mean this as a jab, become very, very convicted in their beliefs, as I have too. And that's typically resulted in what people refer to as toxic maximalism. And it becomes a bit counterintuitive to try and have a conversation, for however you want to say it, on the other side of the aisle. So for me, Bitcoin kind of destroyed my expectation of finance, my understanding of finance. And I just learned that I was very wrong about how I thought the system worked, about how I thought you could win in this system, and the players that control it. And because it was able to shake that belief and allow me to create a new foundation, it's allowed me to be far more understanding of any other point of view that is not my own. In fact, I would argue that Bitcoin has probably made me the most empathetic that I've ever been in my entire life. I'm able to understand what it is to not hold a perception and still not have to come to the conclusion that automatically means that you're right or wrong. It just means that there's more information that's needed for one, if not both sides of the discussion. So I would say that's probably the biggest way that it's affected me.
I find that super relatable. I would definitely agree that most Bitcoiners seem to be very like this just makes them more sure that they're right about the world. Whereas for me personally, and I agree with you, it's made me sort of realize that I don't know much about the world. My expectations can be shattered, even if they're fundamental, like what is money? And that's interesting that you describe it, as making you more empathetic. I think certain like aspects of Bitcoin, especially if you come at it from a top of the funnel pomp style, way, I think it really makes you question like how you came at it, right? And how you approach any subject with that you don't have a large amount of knowledge on. And like you said, I think when I hear things now that I'm not, usually I would traditionally be like, this isn't right, I have my belief or whatever. Now I often wonder to myself, am I just uninformed? Because people who question Bitcoin like that usually are uninformed. And so, yes, I find myself questioning my own, thoughts in that way very much also. But go ahead.
I find myself constantly wanting to argue against the thing that I believe in, just to make sure that I got. So I try to find the people that are actively against whatever belief system that I have in place, and try to understand where their perspective is coming from, and be able to still refute that. And if that's where I'm at, then I'm comfortable. I don't necessarily like saying that I have a formed opinion, and maybe this is just being too semantic with words, but Sadhguru, if you've ever listened to anything he says, one thing that he said has always stuck with me, and it's that formulating an opinion is one of the worst things that you can do, because once you formed an opinion, that means that you've stopped accepting new information. So it's best to remain unopinionated. That way you're always absorbing new information. So I try my best to not get to a finalized point in what I think my understanding is, and that includes Bitcoin. As of right now, I'm convinced that Bitcoin is the answer for a sound money principled economy that is most beneficial to a wide-ranging society. That doesn't mean that something else can't happen or something else can't change, but based on everything that I have right now, that's where I'm at. But I am in no way like 150 years. I know that this is I know that this is what everybody's going to be using. I know this is what everybody's going to be doing. Like I have no idea. I'm accepting of new information on that.
Right. Your position is based not on your opinion, but on the evidence you've been presented with, basically. And I think that's something that Bitcoin is really good at teaching us, is to base our thoughts and our actions off of our evidence that we can, see ourselves, verify, not trust, and kind of contrarian to how we usually do things nowadays, where we get things from information sources that are usually centralized. But moving along, that could be something that we talk about. What's the primary change you want to see come out of the adoption of Bitcoin? And that could be anything from the actual technological process it brings, the societal change it could bring. There's so many aspects of society that Bitcoin is set to impact. I'm curious what aspects you'd be most excited to see it change.
So I didn't know that I was reading the thing that I wanted to happen until I was finished reading it. And that was whenever I was reading the Fiat Standard by Saifedean, a sequel to the Bitcoin Standard. As I was reading it, I was actually kind of frustrated with the book. And it's because there was a pretty lengthy couple of sections, dedicated to conversation that I wasn't necessarily wanting to read about. Whenever I purchased that book, I was wanting to understand fiat architecture. I was wanting to understand how a lot of these different layering systems had been developed. And he discussed a lot of low time preference thinking about how do we approach food? How do we approach fitness? How do we approach the economy as a whole? How do we approach savings? How do we approach, buying a house? How do we approach all of these different things? And a high time preference money requires action from a high time preference society. So I would say that the thing that I'm most excited for, that Saifedean definitely helped me understand, is I want to see what a low time preference society will build on and how that affects a cultural change.
So centric to the actual message of Bitcoin is lowering your time preference. And I think, if we can envision a society that adopts Bitcoin and lowers its time preference, what we see are reflections of the past historically, where great growth in civilization has happened, right? Or great knowledge has been gained. You look at like the Islamic Golden Age, or when the Empire of Rome was being built, and we have philosophers, scientists, knowledge from these eras that we still are fundamental to us today. And I think, as we enter into a low time preference society, we could see a resurgence in this sort of deeper level of thought that might take us into the future and be applicable hundreds of thousands of years from now. So certainly agree with you that low time preference is probably going to be the most important thing that could happen to society probably ever. And Bitcoin is the best monetary solution to sort of implement that. And I'm curious, go ahead.
Oh, I was just going to say, everything's about a system of incentives, right?
Mhm.
That's what Bitcoin's built around. It's just having the correct incentives in place to make sure that people make the correct choices. And currently, we're not incentivized whatsoever to act with low time preference. We're, strictly speaking about the economy, it's you'll hear investors like Pomp, for instance. He talks about all the time asymmetric risk. Like the people that really need money, that really need to invest their money, don't have time to invest in a mutual fund or bonds or something like that. They need asymmetric risk that can give them a larger return, because otherwise they're probably, one, going to lose money as a generality, but two, they're just going to get beat by inflation regardless of what they do anyway. So they have to act with high time preference. They have no choice. So if the incentive system is completely changed and people are rewarded for taking those slower decision making processes, then I think we see better food. I think we see better public health. I think we see fitness at a more wide ranging scale. I think other things that don't necessarily seem directly related to Bitcoin will completely take over if the money simply allows you to even have low time preference thinking to begin with. Because as of right now, I think that it's safe to say that society isn't allotted the choice to have low time preference thinking.
No, certainly, I think our financial situation that we're in right now makes it quite literally impossible unless you have vast amounts of money saved and you're quite literally making the decision to lose that money by not doing anything with it or lose the value of that money. Then there's no chance that we can really lower our time preferences. And it wasn't until, Bitcoin came along that really we had this digital solution for that. Before that, you described like the quality of the food, our healthcare, et cetera. We have regressed in all of those aspects, I believe, from the last 100 years because we've slowly shifted and eroded from a sound money system into this fiat system that we're now in, which, as you say, has a sort of feedback loop with the incentives that just continually lead to more devaluing of goods, services, food, et cetera. Pivoting here, though, you've written some really excellent, pieces for us, Shawn. We're hoping to, continue that, and I think looking forward, we have some really cool ideas about what we can do. I'm curious, in your view, what's the importance of writing in the Bitcoin community, and what's the role that it plays? Because you and I are both heavily in the writing scene here, but also I think of all online communities, of all like subjects that I've found, Bitcoiners really appreciate good writing. They appreciate research, and I've just seen it play such an interesting role in this community. So, what are your thoughts on that?
Yeah, so on an individual level, and then we can talk about the community level. For me, it's always been about my own personal education. I just every article I write, as I mentioned earlier, it's a question that I have that I want answered, and even if I have been able to find those answers, they've been difficult to find. So for me, Bitcoin Magazine as an outlet is one of the clearest places that people go to looking for Bitcoin education. So for me, writing on there and then being able to take these very difficult subjects and being able to break them down into digestible content for already existing users or new users, whatever, being able to discuss it in a way that's easily understood by everyone is absolutely necessary to adoption to me. So for me, it's a way for me to learn, but it's also a way for me to know that one skill that I have is the ability to digest content in a way that makes it easier for other people to get. And I've actually had, I work in retail, and I've had three customers that I can think of off the top of my head that were over the age of 70 that came in. They saw that I was reading a specific book and they asked about Bitcoin, found out that I was writing. And all of them have come back and talked to me and been like, well, you made that really easy to understand. Like, thank you very much, blah, 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 blah. But it was, people just outside of the expected generation of Bitcoiners, right? Happy that there was digestible content for them to understand. That way they could read it, they could try and figure out what it was, how it was different than all these other things that they were hearing about, because they're a generation that has money and they don't know how to jump into, crypto, Bitcoin, whatever you want to call it. So for me, that's been the most important thing, is furthering my own personal education by making sure that I'm doing the research and I'm doing right by the community and making sure that what I put out there is accurate information. And I've been lucky enough to be able to work with other contributors who are willing to, check my work and make sure everything's sound, before it goes out, because that's really important to this community. And that's stepping outside of the individual and over to the community. I think that that's something that's rarely experienced elsewhere. Like the collaboration that you get, not just in writing, but in Bitcoin as a generality. People want to help because people want the information that touches the hands of new users to be correct. They don't want misrepresentation. They don't want false information going out there. They want to make sure that everybody understands it at the level that they do. But the biggest problem is most people that understand Bitcoin at a high level are too well articulated to be able to actually articulate the thoughts in a digestible way. So to me, that's the importance of writing on the individual and community level, because it helps bring in people that might not otherwise be able to figure this out on their own. It's a way to teach. It's a way to provide access.
Certainly. I always heard when I was in school growing up that you don't truly know a subject until you can teach someone else that subject. And as you said, especially in a simple way, Bitcoin is not something that's easily understood unless you, explain it easily or figure out a way to describe it to that audience in a easily understood way. But, education, I think like you said, we're also impassioned about it because we care about the information that people first encounter on Bitcoin. It really sets the tone for how they're going to approach the subject. And I think, as you said, a lot of Bitcoiners understand that the first impact or the first encounter that someone has with Bitcoin education is really going to impact how they go about obtaining Bitcoin, how they store it, and whether or not they go into other coins, et cetera. So certainly it's appreciated how the community really strives and does its best to educate those coming into the space. We're running low on time, so I wanted to make sure I got in some excellent final questions here, both what you were looking forward to in the Bitcoin community, and I'm curious if you have a price prediction for 10 years from now, because Lord knows we need a little bit of a bull run.
Right. So what am I most excited for? I don't know if excited is the right word, possibly anxious. I am most concerned with the continued nation state response. So the political stage internationally is the thing that currently controls a large portion of my interest. Seeing things like Vladimir Putin coming out and saying that they have an advantage in Bitcoin mining, and okay, what's that mean? Now what are we about to see out of Russia? What are we going to see out of Argentina? What are we going to see out of these other Latin American countries as adoption continues? What are we going to see out of Nigeria? These sorts of things are things that I'm most excited / anxious about. I'm very, very curious to see how the world stage continues to respond to Bitcoin. I think that, we'll probably get at least 1 to 2, if not more than that, more nation states throughout 2022 as this, this IMF versus El Salvador thing with the, volcano bonds and just taking a spit in the IMF's face. And, the IMF coming out saying that they want them to reverse the legal tender definition. Like this is all very interesting to me. To me, it's I'm a person that's obsessed with stories. That's why I write fiction. And I couldn't write a movie better than what I'm watching right now. And I'm most excited to see how the world stage story plays out through the remainder of 2022. As far as a price prediction, oh, you you asked me this before, and I said I couldn't care less. And I'll continue to hold to that. The price means nothing to me aside from it's a signal to buy whenever it goes down. I'm happier whenever it's crashing than I am when it's ripping, because it's just harder for me to buy. If I'm gun to my head, what do I think it's going to be? I have no idea. If there's a resolution to this back and forth between IMF and El Salvador, and if people accept that this is real, this isn't going anywhere, the IMF can't step in and suddenly make you accept tender that you don't want to use and get to determine the money that you're allowed to use, and other countries see that and they see, no, we can stand against the current monetary regime that's been in place for a while, then I think we're going to start seeing a much larger ramp up. And I would say that we'd probably see that return to trying to not reclaim, but trying to get that original price target of 100K once there's a closure to this IMF nonsense.
Absolutely. Shawn, thank you so much for joining us. I believe we'll be flipping over here. Everyone, if you want to see what happens on the world stage, you better be at Bitcoin 2022, because that's where it's going to change. So thank you all for joining me for Meet the Plebs, and see you next episode.
Thanks for inviting me on, bud.
Absolutely. Thanks for coming, Shawn. Thanks, Casey. Great to have you as always. Awesome session there. Thanks for giving us something of substance to talk about after that bullshit meeting that we had to listen to for an hour. But we're going to dive back into that a little bit. First, we'll take a short break, and then we'll be back to do a deep dive with Dylan LeClair, CK, Sam, Q, myself. We're going to dive into that FOMC meeting, check the outlook for Bitcoin in 2022, and all sorts of other things. So we'll take a short 1 minute break, and we'll be right back. All right, we're back, guys. Thanks for staying with us. This is a great crowd. We're going to give away some Bitcoin on screen as well as in the chat on the YouTube side of things. So if you're tuning in from Twitter, make sure you hop over onto the YouTube side of things to catch the full chat and catch some free sats that we're dropping. We've got some people purchasing their Bitcoin 2022 tickets as we go through the show today. Every time they do, we make it rain sats in the chat via the Earned Carrot app. So make sure you download your Earned Carrot app as well. And now it's time for deep dive, guys. We're here on both Spaces and YouTube, Twitch. We're all over the place. We're making it happen. We're bringing it all together here with Dylan, Q, CK, and Sam Rule. So I'm really excited to talk to you guys and hear what you thought about the Fed's meeting this morning.
Hey guys, what's up? I don't know if everyone tuned into the FOMC. You probably saw Twitter, but it was the most boring 30 minutes ever spent to say a whole lot of nothing. But it was fun. I was watching 5-second candles on Bitcoin, just watching derivative traders interpret every single word, which is kind of fun. But happy to chat with you guys for the next hour or so.
Before we get into the details of the FOMC meeting and all these other things that we kind of have lined up for this weekly update, Dylan and Sam, I guess, why don't you tell the audience about the deep dive, what you two work on every single day and every single week, and I guess just some background on why we're talking to you about the markets.
Yeah, so deep dive is really just kind of a daily newsletter about all things markets, but really Bitcoin centric, about why Bitcoin matters for the world. But we try to bring a more analytical framework to it, analyzing Bitcoin on chain analytics, quantifying like what hodlers are doing, who's spending, what coins from where. Actually, going through all of the stuff that you can see with the transparency of the Bitcoin network, while also kind of overlaying it with the macroeconomic backdrop and sprinkling in some derivative stuff that you won't probably see on your traditional media coverage. If you want to see some kind of comparison, just take a look at my pinned tweet. It kind of incorporates all the things that we talk about in the deep dive. And so I think today everybody's going to be, talking, the talk of the town is macro recently and all those correlations, but we like to cover kind of all the things happening around Bitcoin.
Awesome. Sam, you want to jump in?
Yeah, no, sure. Dylan outlined it pretty well. I'll just, say we've got over 150 issues here. I think through like issue 75 is all free. We have a free and a paid tier for subscription. So check it out, see if you're interested in it. But, with that, we also cover mining market intelligence from kind of major public mining companies. We try to cover a bit of macro, like we'll talk about today with the Fed. Everything from derivatives, rolling out a lot of different analysis and kind of custom visualizations around on-chain data as well. So a lot there. We're doing that day in and day out. Usually put out about 4 or 5 issues every week, and about 1 or 2 to free subscribers each week.
Awesome. Well, I mean, I guess, Dylan, other than a whole lot of nothing, can you just kind of lay the groundwork for like what the FOMC meeting is and why is this something that derivative traders and other traders of both Bitcoin and equities alike, why they pay so much attention to this thing?
Yeah, so essentially the FOMC is just some guy in a suit and in front of the whole world deciding the cost of capital or the price of money. And that's through credit markets, but broadly, even just a small tweak, a change, or like a rate of change in the price of money influences a whole amount, like a whole bunch of different variables in the global economy. And honestly, Bitcoin, like the Bitcoin crypto markets, it seems to me that it's honestly a more accurate or more free market signal of this price of money than anything else. If you watch like what kind of following November when Powell first pivoted, it said inflation is not transitory. We were wrong. We got to clamp down on this. Bitcoin sold off down only in a pretty relentless manner, while equities didn't really do much. And the last 2 days, if you're looking at the correlations and looking at the performance, while the NASDAQ was down 4.5%, Bitcoin bottomed first and found a bid. And so it's kind of interesting watching it all play out. But Bitcoin seems more and more like a check on central bank irresponsibility. And if the central bank says, okay, we're going to be slightly more responsible, well, Bitcoin may trade down, or, like that's why watching these kind of candles or watching the reaction from the Fed is interesting. Because really, I think it's a bunch of speculators trying to speculate against the dollar. And so it's almost like a game of chicken.
Who wants to jump in here? I guess while we have a little bit of dead time, if you are in the Twitter Spaces, I would really encourage you to go check out the YouTube version. You can see Dylan and Sam's super handsome faces while they break all of this down. But of course, we're doing it on Spaces as well. So whatever you like better, it's all good here. I guess who wants to jump in?
Happy to. Oh, go ahead, Hugh.
I'll jump in real quick, and I'll try to stay calm and not get super heated over Powell literally blowing smoke up everyone's ass. But like, I want to hear from the two of you about what effect you think the raise in interest rate is going to have on the broader Bitcoin market, as well as their decline of asset purchases, which has now, that timeline has been shortened to about within the next 6 weeks. They're essentially saying they're done with asset purchases. So what effects or what are things that you guys are paying attention to as far as how that's going to affect the Bitcoin market at large?
Yeah, I can kind of give my overlay framework and then Dylan jump in if you want to. But yeah, I mean, for a monetary tightening cycle into an area for 2022 where growth and inflation are both declining in the United States, it's not the best environment when you think about Bitcoin being correlated to these kind of macro risk-on assets. Those rate increases are coming with asset valuations coming down, Bitcoin included, especially amidst a strengthening dollar too, if that's happening. So I think any talk, whether it's the action of the Fed or the expectations of the market, like we saw today, where the Fed was completely unchanged in what they wanted to do and just had maybe more hawkish commentary, just talking about having more uncertainty, being open to higher BIPS rate hikes. You can kind of see the market react off that. So going into it, I think it's going to be a tougher year overall, 2022, when you think about investing, much different over like kind of the last 10 years secular bull market that we had. I think what's important about Bitcoin, that when macro is not in the driver's seat, which it is right now, when these things happens, investors are going to be looking to deploy the capital into best fundamentals, best growth opportunities. And I think that's what's, really on Bitcoin side is like when this dust settles, if we have more deflationary events, more corrections amidst this tightening policy, is then people can get back to looking at valuing, assets based on their fundamentals. And I would say Bitcoin's fundamentals in terms of adoption and growth and capital inflows have been some of the strongest over the last 5 years.
Well put, Sam. I think one of the things that we, when we're talking, you hear a lot of people say you can't taper a Ponzi when referring to the Fed and the dollar and all that. And the reality is, even if they marginally increase interest rates and do actually we get a nice deceleration in CPI inflation, and even if the Fed's balance sheet contracts just a little bit, I think the reality is real rates can't go above 0% regardless. And so whether equities, and like the more speculative long duration type assets like ARK Invest and those unprofitable tech and all of that, even if that's collapsing, the reality is like that real rate of hundreds of trillions of dollars of assets can't go positive, real rates. We're obviously positive in nominal terms without the entire credit system unwinding. There has to be perpetual credit expansion. And so Bitcoin, yes, there's short-term correlations with the everything bubble inflating and contracting, but it's just this new asset entirely that's monetizing on people's balance sheets that don't want to play that game anymore. And so there's people that want to dabble in both, in the fiat world and the Bitcoin world, right? Bitcoin has an exchange rate. And so when these kind of events happen, Bitcoin's price is going to get a little bit impacted. But there's that HODLer base, that stacker base is growing every single day. And with absolute scarcity, we kind of understand the network effect that takes place over the long term. And so at some point there will be decouplings and it'll be pretty significant. When that is anyone's guess.
What are some macro factors you're looking for as far as leading to that decoupling? We hear so much about all of the influx of institutional money coming into the Bitcoin markets. Is that in essence almost negate the idea of let's decouple when you have more and more money from Wall Street essentially involved in the Bitcoin markets?
Yeah, I mean, it's tough to say. If you're looking at the type of allocators that have been in this asset for the last decade, but really, like if you're thinking since 2020, especially after March of 2020, we know what happened with the market. But who are those allocators? There's like all the macro fund guys, the guys that realize that they want to have an asset that protects themselves against the debasement of fiat. For the last 10 years, it's been tech who heavily buy back their stock using cheap capital, right? It's just essentially a way of leveraging up and outpacing that monetary debasement. And if you have the lowest cost of capital, you win because you can lever up the most. And there's a pain point like threshold for all asset markets, right? Like stocks can't politically fall probably more than 25% without more stimulus, without reversal, without more monetary expansion. Bitcoin is a free market, crypto is a free market. We could go down 80% and there's no bailouts and it's just, people get liquidated or whatever, but like ultimately there's a buyer and seller. There's a buyer of Bitcoin all around the world at any price, and a growing amount of them. And so, eventually it catches a bid. In March of 2020, that was 3,800. And basically everyone that was leveraged in the entire market got wiped. Could happen again. I mean, that's the reality. In a dollar super spike, there's going to be a ton of marginal sellers. But ultimately, given the nature of people buying this asset every single day, marginal buying eventually begets marginal selling, and price number goes up. That's the technology of Bitcoin. Number go up technology. There's nothing like it.
Hey, Dylan, can I ask you a technical question about something you mentioned? You said that cryptocurrency and Bitcoin both were free markets, and I would kind of push back on that a little, or wonder, does your definition change with the fact that people who are holding crypto can have their property debased and stolen from them by others, or does it still mean, like, what is your definition of a free market, I guess is what I'm asking?
Yeah, I mean, no, nothing's as immutable as 21 million or unchangeable. But more so, I was just kind of speaking of like the exchange rate, right? Like of crypto is, yeah. And like, there can definitely be like there's Ponzi tokens and all of that, but marginal seller, marginal buyer, that's it. There's no, a Fed that's there to bail everyone out or step in, a Fed put.
Gotcha. Awesome.
In terms of Bitcoin markets, I mean, Sam and I, we talk about macro a lot, and that's been the talk of the day. But in terms of on-chain, the stuff that takes cycle, like, quarters, years, plays out in huge cycles, looks really, really strong. Like all of the kind of the HODLing metrics against price, the incentive to sell versus the cumulative HODLing that's happened. And like the long-term holders right now, that's 82% of the supply, which is basically near bear market highs throughout Bitcoin's history. All of that stuff looks super strong. And the Bitcoin derivatives, where there's constantly, you'll hear about leverage longs getting liquidated or wiped out, and that's actually on the bearish side. The funding is negative. There's kind of a negative sentiment across derivatives. It's not bullish. Not everyone's betting on number to go up. Actually, marginally, there's more. The derivatives are under the spot price. So just from those two things, right? Like the macro is the story, but the other two sides of the Bitcoin market that matter a lot after this marginal seller is exhausted look pretty good.
Dylan, can you talk about some of the specific metrics that you mentioned? You just said, the HODLer metrics and some of the on-chain health metrics. Can you talk about some of those specifically, and maybe even point out the ones that you like the most?
Yeah, totally. And if people want to just go in that thread that I have pinned, I go through some of the stuff. What I really like is looking at the market value to realized value. It's kind of like almost this, it's like Bitcoin's like native valuation, if you want to think of it, where that realized price or realized market capitalization is just like the aggregate price that every coin has moved, every UTXO has moved. And we can see that with full transparency. So right now, like the average cost basis of Bitcoin is 24,000. And so you can look at like its market price versus its kind of on-chain native price and like the relative valuation there. And from that standpoint, I mean, Bitcoin's price is about 24,000. It's looking like a pretty good buy relative to historical valuations. It's like a 35th, 38th percentile type valuation. So we can see things like that, just kind of quantifying how relatively cheap or expensive is Bitcoin. I think ultimately, all of us, when we're talking about the market, believe that there is no tops, and they're all eventually local tops. But there's times when Bitcoin's cheap and expensive relatively. So market value to realized value is one of them. We can look at something like coin days destroyed, which shows just how many coins are moving that have been held a long time. Coin days destroyed is just transaction, the amount of Bitcoin in a transaction versus how long it's been since it's last been spent. You multiply those two and you get basically a coin weighting. And you can look at those just in like aggregate over a daily time frame, or over a quarterly time frame, and see times where accumulation is really strong or distribution is really strong. And so those are just some of the things, but that we can kind of see with transparency about Bitcoin, which make it pretty cool.
Sam, same question for you.
Yeah, no, those are definitely some of my favorite. We've got about 20 or so that we go through, and kind of we do this similar analysis where we just look at the percentile distribution of all these on-chain indicators, because one is never a good like, hey, this is the right overheated or overcooled time to buy or sell in the market, and that's not necessarily what we want to do. We just want to, you know, kind of show risk reward when the market is overheated, overcooled, using a lot of these. Outside of those, there's a good one called realized HODL ratio, which it takes kind of these classic HODL ratios that probably a lot of people have seen in terms of, you know, the percent of coins held on by certain age bands of, you know, 1 year, 5 year, 7 year type thing. And it looks at like a really recent band of coins of people that are holding on 1 week versus 1 to 2 years. So that gives you kind of a good relative metric to say, like, are there more kind of activity in that 1 week band versus 1 to 2 years? And so when that's really overheated, you know, we see that there's a lot of like new short-term action relative to the holders. And so what you want to see is kind of more holders. And that shows kind of a little bit more of an overcooled market. But that's a good one as well. We track Meyer multiple, which is necessarily not on chain, but just a function of price. But a lot of people have done around that's, you know, how price relates to kind of the 200-day moving average. And so I would say another one that is just an easier one to track for people. It just shows you where the kind of market is in terms of cycles. And we might even be able to share some charts on this. It's just what long-term holders are doing in terms of kind of their monthly net position change. So long-term holders, talked about it kind of multiple times we get up. It's a classification from Glassnode on just a group within, I think it's about 5 months, that basically a Bitcoin or a part of a Bitcoin is not likely to move after 5 months. So after that becomes that, we have a long-term holder supply. And I'm probably getting a little too in the weeds here, but we can basically see when long-term holder supply is adding, basically buying or distributing, selling. And so that can give us a good idea, depending on where the price is, of what the market sentiment is of holders on the network.
Awesome. Thanks so much, Sam. Yeah, I mean, curious to our producer, Chris, if you ended up getting any charts that we can share. But, you know, if you do want to see the charts, the best place to do that is on YouTube. So I would really encourage everyone who is in the Twitter spaces. I think there's a lot of you in there. Go to the top. I think the second pinned tweet will take you directly to our YouTube page where this is streaming live. And I guess we can jump into some charts. I don't know what else Dylan wants to jump into, if we can change topics or if it makes sense to go into charts.
Do you want me to screen share or?
Chris is saying yes. Everyone in spaces, this is your chance to get into YouTube, check out these charts that we're gonna break down.
Okay, cool.
Also, for everyone in spaces, we're going to be giving out Bitcoin in the YouTube chat. So I highly recommend switching over.
Dylan, I sent you a deck with some slides too, if we want to go through this.
Cool. I go those. Nice. Sam, twin clutch.
Sam's charts are amazing. These are so clean, and I love the color. Great colorway.
They're so clean. Yeah, Sam's been taking our data and throwing it into basically into Tableau, where you can't see him right now. Sorry. And making these super clean charts. You know, showing basically overlaying price action with certain things like derivatives and all that. Using the Glassnode data, but visualizing the stuff in a really cool way. So here is, and you can see this pretty clear there, right? Should I zoom in more?
Yeah, zoom in a little bit more.
All right. So like here, this is long-term holders, basically when they're distributing and accumulating. And so you can see like basically throughout history, like every time Bitcoin's price appreciates by an order of magnitude or goes parabolic, the accumulators of the last 3, or, you know, really 1 year, 2 years, 3 years, or anyone after this kind of threshold, which is 155 days, but coins wait into it as they age into that waiting. But you see they distribute, or they accumulate during consolidation periods, during bear markets, when no one wants Bitcoin, when all of the people have been shaken out, the hodlers of last resort, when they accumulate, that's basically why Bitcoin finds a bottom at some point. And usually they distribute as price increases. And just recently we saw kind of a distribution on the way down, which doesn't really happen. It's somewhat of an anomaly, but we can kind of think about it as more of a macro response, as it's kind of become more of an institutionalized asset. So it was just interesting to see. Hadn't really seen that in the data before in Bitcoin's history. So, maybe it is kind of maturing.
That is really interesting. People panic selling Bitcoin, as and that's where it's being distributed instead of being accumulated by the hodlers. It is really interesting.
Yeah. So here's this one I'm showing is that Sam was talking about realized price, and we can kind of look at the realized price, or like the cost basis on chain of these long-term and short-term holders. And really long-term holders, their cost basis for the most part is like up only, but kind of watching the interplay of these two and what it means for the market. Like in a bull market, short-term holder cost basis, that average is like almost like a support for buyers, as new money comes in, they just competitively bid up the price. And then when that breaks, you see some sort of capitulation, and that's kind of when we get those bear markets or bear market periods, is when that new money is underwater and those coins distribute out. So just kind of seeing the interplay of these things is pretty interesting. We can visualize it in a bunch of different ways.
Yeah, and this just goes back to that, similar chart we had long-term holder supply. This one up right here is just that net position change. So what you're just seeing is, 30-day change is long-term holder supply increasing, decreasing. It's basically over Bitcoin's lifetime increasing, and its percent of circulating supply is not at all-time highs right now, but it's pretty near it, controlling, 70% of kind of the float of Bitcoin supply. But what we see from this chart, what Dylan was talking about earlier, you see these bull and bear market kind of dynamics where, you have this distribution in more bull cycle phases because, long-term holders price is going up, new demand is flowing in, and long-term holder supply decreases. There's more selling. People are taking some profits off the table. And then you get these, maybe what you'd call more bear market dynamics, although, it's probably never great to just call something a bull or bear. It's kind of a full spectrum. But like right now, we look to be in that type of period where, people are happy to accumulate more at these prices and, be more worried about kind of short-term Bitcoin price action if we saw like this continued selling or distribution of long-term holders, which we kind of were not seeing as of late in January. So kind of saw that in November, December. I think that makes sense with kind of the macro situation, people kind of de-risking and getting in other assets. So back to kind of this accumulation phase, and we'll see how that kind of progresses over the next couple of months.
One of the interesting things was watching this summer was the dichotomy between like derivatives getting super bearish after a huge dump at 30K and just a huge accumulation, if you want to think of it as like a spot accumulation, as these coins were just being, especially since the top, you just saw a massive amount of long-term holder supply growth, signaling that these coins weren't heading back on the market as derivatives went really bearish, and that's why we saw such a V-shaped bottom earlier in the year. And we're kind of seeing that start to play out again. We're not there yet, and we might see some more downside, especially if equities get ugly. Sam, you've been talking a lot and sending me a lot of data about kind of this global slowdown of growth, and as inflation rips, corporate margins getting smaller, and that having some effect on equities, which could, if Powell takes the punch bowl away from markets, there could be some effects there. The marginal seller is just going to be probably pretty strong at that point. But at some point, Bitcoin finds a floor because that marginal seller runs out, like we've been talking about. And on-chain kind of shows these accumulation dynamics. And if we overlay it with our derivative market stuff, which is often it's not really understood too well by a lot of people, but obviously it's a huge effect. All the whipsawing volatility today, it was just like derivative traders longing, shorting. That's just interpreting every one of Powell's words. So I don't know. We like to look at all those sorts of things, and it's been rather fun as of the last couple of years when we got involved with it.
So Dylan, I guess, can you talk a little bit, and I don't know if you still want to share your screen or not, but Can you talk a little bit about why it's so important to not just look at on-chain, but to look at macro, to look at derivatives like you do on the deep dive?
Yeah, the first thing I'd say is like, you know, if this stuff, if you're just a buyer of Bitcoin at any price, and you don't care about the market, that's fine. I think the reality is the exchange rate ultimately does have a kind of a material impact on you as a maybe not an investor, but as a saver. Whether your income's going up or down, or your savings are going up or down, or if you're a hardcore Bitcoiner and you're never selling, well, how do you utilize that? And that's with as collateral, right? Bitcoin borrowing and lending, and obviously there's optimal times to do that. So yeah, I guess I would just say, you know, stack Bitcoin regardless, because it's the best money the world's ever seen. But if you want to kind of understand the dynamics of what's happening a little bit more, and why these seemingly random moves aren't so random, and these, you know, these imbalances build up under the surface, whether it's with derivatives or, you know, huge on-chain distribution happening, just overwhelming, you know, buyers and sellers, or even like the last couple of months, kind of an unusual dynamic with Grayscale, and they have basically 650,000 Bitcoin, and the premium or the discount actually just got smoked. So you saw that discount go to record lows, minus 30%. Well, that is a pretty material impact, and so we were talking about that a little bit as that developed. And so, you know, we cover all sorts of things, but overlay it all with this thesis that Bitcoin is the best money the world's ever seen. And in the long term, like, some of the volatility doesn't matter. But if you want to understand why the volatility is actually happening, and, you know, we're not giving trading signals, but more kind of getting a probabilistic analysis with some quantitative data and good visuals. And so that's why I think, you know, I recommend people leave, if nothing else, just hop on the free version, and I think you'll find some value in it.
Same question to you, Sam. I guess, like, great job articulating that, Dylan. But like, if you were to like think of how you look at Bitcoin at any period of time, what percentage is based on-chain metrics versus what's happening in the macro backdrop versus what derivative traders are doing?
Sure, that's a great question. I use them for all different types of scenarios when I'm looking at the market. So for myself, I'm a Bitcoin buyer pretty much any price over the next, you know, 10 to 20 plus years. And so when I think of like that thesis, that long-term thesis, I think on-chain is really valuable there at looking at the history of 12, 13 years of Bitcoin now, and finding these bottoms and tops and the cyclical nature of Bitcoin and how it's behaving long-term. So you can take a lot of these, you know, high risk, you know, reward type signals, and you can say, okay, maybe it's a good time to allocate more Bitcoin if I'm looking at a 4 or 5 year time horizon. Right now, and I think over 2021, what a lot of people learned is that, you know, Bitcoin is a small asset in the larger macro world. And right now there's a lot of macro uncertainty, and it's going to drive a lot of kind of the demand in Bitcoin right now. So right now, probably like percent of time, I'm trying to study, you know, macro 78% of the time, 70 to 80% of the time, trying to understand over the next 3 to 6 months, where is Bitcoin headed? More long-term, I look at that on-chain kind of perspective. And then derivatives, I would say that's something like daily, weekly, you know, you're looking at these dislocations, these liquidation potentials, these price movements. So I would encourage people, you know, to look at all these pieces, but to look at them in like different time frames when you do.
Also, the thing that we didn't really mention is like price action itself. Like, you know, people are like, no, technical analysis is BS. You know, it's just lines on a chart. But ultimately, like, if you're, say, looking at the derivatives market, for every long, there's a short. And so, like, it's not like what you need to overlay is, say, like, how's the derivative market positioned, or when did this open interest come in, versus what's the actual price action look like. You know, you can tell a lot of things about really any asset by looking at its chart. And I think that's kind of something that obviously seems like oversimplified, but the chart itself, along with all these sorts of other things, means something.
Do y'all want to talk about HODLer trends? I mean, we talked about on-chain a lot, but I think specifically HODLer trends, like, that could be interesting to talk about a little bit here.
Yeah, I mean, we can dig into it for sure. One of the things that I like, one of my favorite on-chain cyclical metrics is reserve risk. So it takes just basically the price divided by, and then it's called the HODL bank, but really it's just a way of quantifying the cumulative like HODLing or opportunity cost undergone by HODLing over the course of Bitcoin's history. And so it sounds complicated, but basically it's just quantifying how much the HODLing versus the price. And so what you can see is when that metric is really high, and it's charted in log, but it's basically the incentive to sell is the highest or very high, and all of the HODLing conviction is really weak. And conversely, when that metric is really down, you see HODLing conviction is high and the incentive to sell is weak because price has already gone down a bunch. And so we just actually broke down below what we saw this summer, even though price hit 29,000 or 28.5, something in that range. Even though we hit those prices, we're at a kind of a lower reading in this kind of risk adjusted metric, if you want to think of it. So obviously buying hand over fist if you enjoy stacking sats, and this is nothing but an opportunity as long as you kind of didn't get wiped out, didn't take on too much risk with leverage. What other ones on chain, Sam, am I missing here? We've talked about reserve risk, market value to realized value. We cover that kind of Coinbase destroyed. What are some other on-chain stuff that we like looking at?
Yeah, I could just talk briefly instead of like a major, maybe more complicated metric. One thing that we try to look at a lot, and it's a little more difficult to figure out, is just kind of activity between a group, what we'd say is retail or whale entities on the network. So, Glassnode does a lot of data heuristics to try to figure out what addresses make up an entity. And then we can kind of within that determine, okay, are those entities holding, 1 Bitcoin, 10 Bitcoin, 1,000, and then we can kind of break that down into groups. So, one trend we've iterated and showed a lot is just over time, there's just up and to the right kind of accumulation and buying from retail, retail increasing their supply distribution, which is probably upwards of 5 to 6% now. And you could define retail as maybe entities holding or people or institutions holding under 10 Bitcoin. And so as of late, retails have been buyers. And the way we look at that is just 30-day percent change. So are they buying, adding, or selling, or getting rid of their supply compared to the last 30 days? And then just over the last 3 days, what we've seen too is like from a whale perspective, is whales were typically over the last couple of months shedding supply. And what we know from that group, where you can define it in a lot of different ways, entities that hold 10,000 to 100K Bitcoin less exchange balances, or kind of 1K to 10K. But when you look at those metrics, whales are starting to add a bit more over the last few days, which typically has been, good signals for the market kind of rebounding when whales step in to accumulate a little bit more. So those are some interesting trends developing right now, kind of a little bit of reversal from the last 3 months, but we'll see how that progresses over the next month or so. Kind of with that too, think about like overall demand. And so that's what we're really trying to get at when you're trying to look at whales, or like institutional demand that comes in, because kind of the next wave of Bitcoin is you need a lot of capital come in to move the network and to move the market cap up, which is likely going to come from institutional demand. So another good way to look at that is just overall fund inflows and outflows into different Bitcoin vehicles around the world. So got spot Bitcoin vehicles and spot ETFs, not in the US, but in other countries. Got other vehicles like Fido that track futures ETFs. So we're starting to see over the last few weeks, when you look at those fund inflows and outflows, those are still a little bit of outflows, but they're picking back up and kind of accelerating. So those are kind of positive signs or demand signs that we look for, kind of at least what I look for when I'm looking at like institutional investors come to the market.
Q or Alex, you guys want to jump in here? Or, sorry, I didn't mean to interrupt you, Dylan.
Go for it.
Dylan, you
He's
talk.
saying go for it.
They're here to listen to you talk, not me talk.
All right. I think one of the things that to pay attention to in 2022, kind of the next narrative, you see Bitcoin oftentimes has a narrative or like just, and it's been a bunch of different things for a while, but 2020, 2021, it kind of took a digital gold, the whole Michael Saylor corporate adoption. We ultimately didn't really see it too much in 2021. We saw a lot of publicly traded Bitcoin miners, and we actually saw a nation state, which was a huge surprise. I think that may be the next kind of narrative catalyst, whatever you kind of want to take it, is not institutional FOMO, even though we'll get that increasingly. And it's almost been, these billion-dollar, multi-billion-dollar, whether it's IPOs or more so like venture capital deals all over the ecosystem are pretty normalized. I think the next kind of catalyst is probably a geopolitical, maybe not race, but a geopolitical event with Bitcoin. We saw the IMF tweet yesterday. There'll probably be another country or two. And after the second and maybe a successful Bitcoin bond raise with El Salvador, where it's very oversubscribed and the entire world realizes that you can kind of skirt around financing from the World Bank and IMF, that might get really interesting. So, if that bond's oversubscribed, if it's a huge success, then another country's going to do it. There'll be more countries adopting it as a sovereign wealth asset. Maybe Russia starts mining Bitcoin. Like, these things like that are really exciting and are definitively not priced in. I will say that.
We're getting
nation state level. Go for it, Q.
I was just going to say, off of the Russian news from Putin's announcement late last night, we're witnessing game theory come to life in real time. I'm sure Bukele will have something interesting to say at the conference as well, whether it's another state he's bringing in. But I have a question for Sam to tie in sort of the Fed's announcement and what their plans are going to be going forward. What are you looking at as far as the publicly traded miners? A lot of those companies have been really beaten down. They've seen losses much greater than the Bitcoin losses have been. At the same time, they saw gains much greater than Bitcoin's gains last year. Is there anything you're keeping an eye on out of that space going forward?
Yeah, we talked a little bit the last time with CK's kind of speculative nature on if Bitcoin miners are going to be able to bring the hash rate that they expect online throughout the year. So definitely trying to keep track of each month when you're getting updates, are Bitcoin miners bringing that hash rate? And I think the other one too is there's been such an increasing trend over the last year and such a race from Bitcoin miners to accumulate Bitcoin in their treasuries. And so now it's trying to assess, are they well positioned in these really drawdown times for their business, or when their stocks are hitting this hard or where liquidity dries up? Are they going to be holding all of that Bitcoin? Is there a price point where Bitcoin goes where they capitulate and have to sell some of that for their business? So keeping an eye out for like the major miners to see, outflows of Bitcoin treasuries. Haven't seen any, don't expect there to be. But I think those are the two. Are they bringing in the hash rate that they have basically told the market, hey, this is what we're expecting? And then are they increasing their Bitcoin treasuries at these levels? And so far they still are.
I think it'll be interesting to watch for. You see all these public companies coming, publicly traded miners. I think there's like 20 something now in the US and Canada. There'll be more, because if you're just looking at like Bitcoin production costs and their margins of these publicly traded miners, it's outrageous. So you can be somewhat semi-profitable with pretty expensive power as of now. And so more capital flow in. There'll be more inefficient miners that come to market and lever up, and can probably do it for a while. But as difficulty ramps up and hash rate kind of just goes to the moon eventually, I think that their margins will get squeezed, and we'll see who's weak and who's strong in these kind of capital markets. But we haven't really seen that down cycle yet, so something to watch for.
I want to make a shout out.
I gotta interrupt. Wait, I gotta interrupt, bro. We're gonna promote YouTube. Come on over to the YouTube side of things to watch. But shout out to Tim Dillon in the audience. Huge guest in the audience. We gotta bring him up to talk Cathie Wood if you want. But outside of that, if you're watching or listening on Twitter, guys, follow along on YouTube. We've got a visual component to this as well. And we're giving away Bitcoin in the chat on YouTube. Sorry, CK, go ahead.
I was going to do that exact same thing. And y'all, the second tweet that is pinned in the nest is the link straight to this live stream. So it's as easy as that. Just click on the link and check us out on YouTube. Shout out Tim Dillon. Come to Bitcoin 2022, my man.
I kind of want to also talk a little bit about this strategy that all these mining companies seem to have all slowly adopted one after another of like, we're going to hold anything that we mine. Do you think this is a strategy that will continue through the next halving? What effects do you think like a smaller block reward will have on that strategy? Or do you think this is for this moment right now, while the block reward is where it's at, it's the most lucrative to keep them, and then going forward, that strategy will change?
Yeah, I mean, that's a great question. I think with the financialization of Bitcoin over the last couple of years, where like you saw like NYDIG get in and these other kind of big institutions where you could get financing on your Bitcoin, you know, and get cheap debt against it, was something that was huge. Miners are no longer forced sellers, and the more profitable, the larger your margins are, the more you can do this strategy. As difficulty ramps up, and as you know, if you're thinking about your Satoshi revenue, your BTC denominated revenue, not your dollar denominated revenue, is programmed to go down forever, unless you can keep up with hash rate, which is just basically impossible, probably. And so, yeah, I mean, eventually there'll be a squeeze. If you're looking at, say, like what happened in 2018, the big capitulation from 6,000 to 3,000, there's a lot of variables there, but one of the things was that despite the 2017 blow off top in Bitcoin's price, hash rate continued to just go exponential. And so like all these miners that were spun up when Bitcoin went parabolic and hash rate was super low, that were profitable anywhere, and were buying machines on leverage with debt and levering up to buy, you know, fixed power contracts. Well, they all got wrecked and became forced sellers as their profit margins squeezed. And so, you know, we'll see that event play out, and it's kind of a Darwinistic thing. But you know, we're not there yet. We haven't seen that down cycle, but right now they don't have to sell because their margins are so wide, and they can just use the Bitcoin as collateral to finance and grow.
There's an increase in collateral offerings because like present day, there are only a limited number of issuances where you can actually collateralize your Bitcoin holdings. Will an increase in that market help essentially push forward what you're talking about, or just purely speculative, of course? But
yeah, I think it only makes sense. I believe that like the Bitcoin finance cost of capital, where you're over collateralizing to compensate for volatility, but that'll soon be eventually. I don't know about soon or timeline or for what markets, because there's obviously regulations, but that'll eventually be the lowest, you know, cost of capital like of anywhere on the world, probably. You know, you can get a house for 30 years at 3% if you have a solid credit score. And so why can't you borrow Bitcoin cheaper when it's more liquid? Maybe not yet, but it's fungible. It's global, 24/7, 365. There's a clearing rate. You'll eventually be able to finance your Bitcoin in a pretty convenient way. Probably all the banks, the Wall Street banks, are coming, and if they're not coming, then they're not going to make it. And you'll be able to use your Bitcoin and you know, get some USD liquidity that already exists on, say, like derivative exchanges and quote unquote decentralized finance that's not so decentralized, and that's fine. You're using third-party protocols or third-party counterparties, and you know, that's fine if you understand the counterparty risk as well as the exchange rate risk, right? Because there is leverage inherent in that strategy. But you know, for Bitcoin holders, honestly, you should hope that the dollar or, you know, fiat currencies don't go away right away, because there's kind of a lot of things that you can do while this asset's in its monetization phase and appreciating.
So talking about those opportunities for smaller, I don't know if you want to call them investors exactly when it's Bitcoin, but people who are looking to take on a little leverage, maybe for the first time, or feeling they're comfortable in their Bitcoin position, they want to take on a little more risk. Do you want to talk about just next steps and things like you'd recommend, even specific platforms? I know there are only a few that will let you use your Bitcoin as collateral. I'm just interested in the paths forward for people like that.
Yeah, I would first understand risk. You know, you even thinking about Bitcoin as a percent of your net worth, and thinking about exchange rate risk. What happens if what I, you know, my collateral, if I borrow, what happens if Bitcoin draws down 50%? What's your collateral to loan ratio? The higher that is, or the lower your loan to value ratio, the other way around, the safer you are in terms of exchange rate volatility to the downside. But given an assumption over the longer time frame, so to not be too responsible and say number is going to go up tomorrow, we can kind of expect with Bitcoin's absolute scarcity and the properties of fiat, that the exchange rate will appreciate. And so if you're sitting with all of your wealth in Bitcoin, well, obviously, like, you'd like to take advantage of that in a way, aside from just holding the asset itself, especially if you have an incentive to not pay taxes by spending your Bitcoin because you live in the US per se, and you want to spend some fiat. And so you can borrow against it and actually avoid that tax burden in a way. And so thinking about exchange rate risk, what happens if Bitcoin goes down 50%? Am I going to be okay? So yeah, if that's a small allocation, that's doable, and you can double down and recollateralize or even lever up a small amount more. But thinking of platforms, I don't really know if I should like shill any specific one. I love the guys at Unchained Capital. They have a really great team. Can't access them everywhere, obviously. And people probably are going to be in my DMs saying like, DeFi fixes this, which is a different story. And you're trusting different protocols and all that. And you're borrowing stable coins and not, US banking system dollars. But, it's something that if you're sitting with a majority of your wealth in Bitcoin collateral or Bitcoin, you'll probably want to think about it at some point and how to take advantage of it.
Love it. Sam, same question. Do you have any suggestions that are different from Dylan's in terms of
Before he
analyzing
jumps in,
your risk tolerance?
Before people who are around today who even can get access to BlockFi or Unchained Capital, like that's so much more useful than it used to be just in 2016, 2017, 2018. You could not get anything going. So, if you had Bitcoin in the past, you would have to sell it. And now you don't have to sell and you can get fiat dollars if you want.
Yeah, it's a great point. I mean, I would go back to when we're talking about mining from like a mining trend perspective. This is even new on an industry level as well, not just an individual. So, mining companies are taking out these revolving lines of credit and using Bitcoin collaterals the first time. So, I mean, it's a relatively new product to the industry. I would, tell people to map out risk scenarios that if you're going to what it looks like in the worst case scenario. And that's going back to, and a little bit of what we wrote about in deep dive yesterday of just these full capitulation levels in markets. Number doesn't just go up, it goes down too. There's a wide range. And to have a good context and a good sense of how low, Bitcoin price can go and what you're comfortable with in terms of what you're borrowing and your leverage if you're looking to do that. So I don't necessarily promote it myself, but just try to help people understand the risks around it.
What do we chat about next, gents? How about correlation to the stock market? That's been a big meme and an attack vector recently.
Yeah, I think at the margin, expect that to continue. Bitcoin's kind of, when you're looking at just in terms of its relative valuation, it's a lot more attractive than it was a few months ago. But, we're not going to, with these current capital inflows, and they've been obviously capital outflows, but that realized price metric that we're talking about, if you just look at it in a log scale over the course of its history, it basically only goes up. And during bull markets, when you want to think about that, it's going up in a log scale in a pretty aggressive fashion. And bear markets or, consolidation periods, you see that realized price metric is basically just flat. And the closer that realized price and the market price converge upon each other, the closer you are to somewhat of a parabolic uptrend, because the capital inflow has already occurred. Bitcoin's at fair price, if you want to think of it like that. So if we got to 24K, or we consolidated for a while, shook out some weak hands, the stackers that knew what they were doing bought up the coins, it wouldn't take all that much capital inflow for Bitcoin to kind of move. But while we're in this kind of range, and you have capitulation from people that bought at 60,000, 50,000. You have relentless macro sellers that are just trading correlations. You have that convicted HODLer base that's buying those coins and kind of accumulating under the surface while the exchange rate chops back and forth or goes down actually. But when those tech investors and the people that are watching the Fed and trying to play the upswing of the everything credit bubble, when those marginal flows come back in a strong way, they're not going to have that many coins to buy up. And so I think the macro correlations stick for a little bit, especially in 2020, and especially if it's in a downtrend, because all assets will tend to one during a deleveraging. That's what we saw really aggressively in 2020. It's what you saw even with, like, say, gold in 2008. Gold went down during the financial crisis. Why? It was a liquidity crunch. So that's the reality of, like, the fiat system. And if stocks are trading down, if the VIX, the volatility index, is spiking, Bitcoin's gonna not perform too well. But those buyers, the people that are buying the blood, I think they know what they're doing, and they'll be rewarded pretty handsomely when the tides turn.
Yeah,
Y'all, if you
Oh,
sorry,
go ahead,
Sam, I'm sorry. I just have to keep showing y'all. If you're in the spaces, go over to YouTube, and per the request of the YouTube audience, we will be taking questions from the YouTube chat. So if you're requesting on spaces, go to YouTube, chat your question, and we will answer your question from there. We only have about 10 more minutes left on this, but moving forward, we will be taking questions from YouTube. So have no fear, YouTube viewers. We will be optimizing YouTube.
In the
I'll just
meantime,
add,
should we? Oh, go ahead, Sam. Go ahead.
No, I was just going to add on the correlation front while we're here, and then it'll be quick. There's a chart I had from NYDIG put out. There's some equity correlations there over some different equity markets. Right now, Bitcoin's correlation rising with S&P over the last 3 months. So I think pretty important going back to, when does macro take over the markets and when you should pay attention more. And over the last 3 months and into the next 3 has been some of the key ones. But go ahead, Alex.
I was gonna say, oops, let me get my space on. In the meantime, I was gonna say, catch us over on YouTube, but also catch us at Bitcoin 2022. You can get 21% off with the promo code YTMAG. With that, let's get some questions from the chat here.
I'll read off this first one from Al Carry On Right. I hope I pronounced that correctly. What are your thoughts on responsibilities of crypto influencers, we'll call them Bitcoin influencers, in managing the expectations of how new retail participants coming into the market?
I mean, I think everyone was a little overly bullish in 2021, myself included. I mean, just kind of judging out 4-year cycles. It was kind of, if you'd been in Bitcoin for longer than just the start of 2021, it felt like we were going to go to infinity for sure. Sentiment was through the roof. Everyone was kind of euphoric. So managing expectations is obviously something that needs to take place. And, if you just came in 2021, if you were, buying because someone said 100,000 or Plan B's model looked really good, which, like, bar none, like I can't lie, in 2019 when I read it as a senior in high school, like I was like, oh my God, I'm short Bitcoin and I needed to buy as much of this thing as I can. So in that sense, like, thank you, if you want to call Plan B an influencer for like some model that's pretty arbitrary and just, a math equation. But like at the same time, having those managed expectations, understanding that volatility, downside volatility is your opportunity in this asset. If you are a new market participant, is the thing that I would say the most. That's the most important. Anybody that's been in Bitcoin that's seen insane gains likely didn't buy the absolute bottom with their entire net worth, and maybe bought $1,000 in 2013 and it went to 200, right? Like that was pretty painful, but what was the smartest thing to do? Just continue to accumulate the asset, because over the long term, it's, far underpriced. And I think that's obviously with less upside than 2013 or previous cycles, just due to the monetization process of the asset, like we're further along. But global adoption, I would say, is still 1%, maybe not even 1% of all capital. It's not even there. So I think we have a long way to go, and just buy the blood.
I completely agree. I think this is a long-term asset, a long-term play. And if you're worried about, a month-to-month or week-to-week price action, you're not in the right mindset for Bitcoin. When it comes to what are what are influence responsibilities? I think it's just a stupid question, because what is your responsibility? You are a individual. You have control of yourself. You need to do your own research. And the reality is the only thing that you can count on is yourself. Everyone else has some other influences. And that's why you really got to be careful of the quote unquote crypto influencers, because they have something to sell you. Whereas, Bitcoiners, obviously they have, to share the good word of Bitcoin, but, we can't print Bitcoin out of nowhere. We haven't insta-mined anything. We didn't create this stuff. We bought it just like everyone else, or mined it or earned it. Bitcoin is proof of work, and that is the only way to get Bitcoin. And that is something that's really, really key. So, my, what I would say to the person who's asking about what's their responsibility, I would say, what's your responsibility? And Bitcoin is all about personal responsibility. And, that's how we fix the world, is with personal responsibility.
Well said, CK. Love it, man.
Yes, definitely second that. If you're making trades based on what influencers say, I mean, and buying Bitcoin is fundamentally a trade, and you're also making trades at every moment, economical decisions about what to do with your time. And you should think through those decisions for yourself, and you should verify the information that everyone on stage and everyone everywhere is telling you. And, don't rely on trust, because this is your future and your family's future that we're talking about here. And I see kind of tough times ahead for storing your value in the dollar. So we encourage you to look elsewhere and to look in Bitcoin. But, come verify, come find out, come check the supply, run your own node. Don't trust, verify.
And I would say, we talk about the deep dive a lot on this chat. And then obviously Dylan and Sam and our team are putting in an enormous amount of work to make that a super, super useful asset to Bitcoiners out there. But the deep dive is not trading signals. The deep dive is not supposed to help you to get, this insane alpha on top of Bitcoin. All of us are hodlers, and all of us are trying to just better understand what is happening in Bitcoin. And it's really about the context and the understanding of the world hyper Bitcoinizing. That's what, Sam and Dylan are investigating. So if you're subscribing because of trading signals, or you want to trade, the deep dive is going to help you understand Bitcoin much, much better. But that is not the purpose. And we're not trying to, help you get rich quick per se. It's really about you gaining knowledge as a reader.
Well, we do drop some alpha sometimes, but agreed.
Dylan, we're about pretty much hitting time, but I guess why don't you talk a little bit about maybe the history of some of the alpha that you've dropped, or some of the guidance that you've been able to give your readers.
Yeah, like we said, we just talk about some of the on-chain stuff, the derivative stuff, and overlaying those two, and as well as price action itself, the macro backdrop, cover like kind of the secular adoption of Bitcoin and the institutionalization of it as an asset class. But in terms of, I guess, if you want to call it alpha, just highlighting like over the summer, the huge dichotomy between spot accumulation, HODLer, conviction, exchange flows, and then derivatives, which are bearish and, trying to desperately send Bitcoin below 30,000. And I had highlighted that, pretty intensely back in the summer, and obviously we got a big bounce. So like, not saying go lever long, and it's all probabilistic in nature, but just some of those things that, again, you won't see on CNBC with Jim Cramer, we talk about.
Awesome. Well, y'all, thanks so much for the time. I guess any closing words from Sam or Dylan, or I guess, maybe we can tell people where they can find more about the deep dive.
Yeah, we'll see you on Substack.
All right, y'all, subscribe, go to Bitcoin 2022. Thank you so much for watching this episode of WTF is happening with the Bitcoin price. Name might be changed, but the alpha and the knowledge will be coming back every Wednesday, both on YouTube Live and on Twitter Spaces.
All right, guys, we're wrapping up here. We'll do a last little Bitcoin giveaway. I think I got Q still with me. So Q, we'll drop a little Bitcoin on the audience as we wrap up. What are we looking forward to tomorrow, man? I heard we've got a pretty big stream lined up.
Tomorrow's gonna be awesome. CK Snark will be back with us and Robert Breedlove as well. And we're going to be talking my favorite book of last year, Sovereign Individual. So get ready for tomorrow's Bitcoin book club. It's going to be awesome. And then we're going to be joined by one of my favorite comedians, Joe Kiswala. And we're just going to chat about his first Bitcoin and sort of what is going on in the comedy world in the post-COVID environment.
Bro, I mean, we're gonna have Andrew Schultz on as well. Let's get a steady stream of comedians on this thing. I'd love to have Tim Dillon on. I'm sorry I scared him off, everybody, but
he fully was like, "Oh, this freaking guy."
Yeah, dude, I've been bothering him all the time. This is my favorite podcaster, hands down. The most entertaining podcast you'll ever listen
former
to.
MMA fighter in your bio who's like, "This is not the guy that I need to like accidentally start stalking me."
I don't know, man. I don't know. But yeah, I'm super excited. What's up?
What language is your Twitter set to?
German. Whole phone's got to be German, son, so people can't be picking it up and messing with it.
I actually like
can't be reading over my shoulder unless you're German. Anyway, yeah, super excited for the show tomorrow. No show Friday, but we're back. We're gonna stack next week. I just wanted to remind you all that came over to YouTube. We have a special promo code for you, and tonight's the night to get your Bitcoin 2022 tickets. We had like about 10 of you in the last 24 hours buy tickets with this promo code, so I'm really excited. That means there's only a couple of you left that haven't got your tickets yet. The promo code is YTMAG for 21% off. And come listen to that pure signal from Dylan and Sam in person at Bitcoin 2022. I'm sure Dylan will be of age by that time, and you can have a drink with Dylan. You can hang with Q and me and all the other monsters of Bitcoin that are going to be there. It's gonna be great.
I can confirm Dylan is going to be 21 by the time we go to Miami. So God help us all.
Dude, Dylan's gonna be 21. The price of Bitcoin's gonna be $100,000. It's gonna be a great time. So you gotta think ahead. Get your tickets tonight.
I'll talk to you offline, but I do not want a $100,000 Bitcoin by conference day. I actually want it to be lower, but for reasons that are very selfish.
Well, this is actually something I wanted to bring up, but I didn't want to derail the conversation. The best thing you can do if you're a person or a nation state, this is obvious, right? You don't promote Bitcoin. You don't become a Bitcoin influencer. You just quietly hodl. And if anything, you go Peter Schiff and discourage people from buying Bitcoin so you can get in at a lower price. But the incentive structure was a little off because Satoshi knew that we'd want to, kind of spread the good word a little bit and be, I guess, prophets before our time. Otherwise, everybody would have just kept quiet about it.
Yeah, I mean, everyone who owns Bitcoin should believe in Bitcoin enough to have a conversation about it with one person that doesn't. And if you have that one conversation and convince one person, the domino effect is endless. But that's a conversation for another day.
Yeah, absolutely. All right, we'll be back 1 p.m. Eastern tomorrow, guys. Don't forget to like and subscribe. Turn your notifications on. Buy Bitcoin 2022 tickets. Remember, 21% off, promo code YTMAG. And with that, we're out.